Good afternoon, ladies and gentlemen. A very warm welcome to all our participants, dignitaries, speakers, and panelists to the online seminar on what MSMEs need in the current economy, organized by the IMC Chamber of Commerce and Industry. All participants will be muted to avoid any disturbances during the course of this session. To consume less bandwidth and have clarity, you're requested to stop video streaming at your end. Kindly post all your relevant queries related to each session in the chat section so that the same can be addressed during the Q&A session by the moderator. To commence the conference, may I now request Mr. Rajiv Poddar, President, IMC Chamber of Commerce and Industry, to present the welcome address. Over to you, Mr. Poddar.
Thank you, Selvi. Good afternoon, ladies and gentlemen. It gives me immense pleasure to deliver the welcome address at the online seminar on what MSMEs need in the current economy, organized by IMC's Banking and Finance Committee, jointly with the Digital Technology and Industry and Trade Committees. A very warm welcome to our esteemed speakers, moderators, and participants. MSMEs are the backbone of the Indian economy. Today, as MSMEs in India are estimated to be 63.05 million, contributing about 30% of the country's GDP. In terms of export, they are an integral part of the supply chain and contribute about 40% of the overall exports. MSMEs employ about 110 million people across the country. To ensure that MSMEs continue to lead the country towards economic growth, the Government of India has from time to time announced schemes to support the various developments of this sector. Recently, in view of the economic hardship caused by COVID-19, the government has announced various schemes under Atmanirbhar Bharat initiative. Some important ones are rupees 3 lakh crores emergency credit line announced, ensuring that 45 lakh units to have access to working capital to resume business activities and safeguard jobs. Provision of 20,000 crores as subordinate debt for 2 lakh MSMEs which are stressed or deemed non-performing assets. A 50,000 crore equity infusion through an MSME fund of funds. The government has also amended the General Financial Rules 2017 to disallow global tenders in government procurement up to 200 crores. This bold step is expected to create more opportunities for domestic players and will allow the local industry to gain from this initiative. The criteria for classifying MSMEs has also been revised. Under the revised criteria, the combined factor of investment in plant and machinery and turnover are required to be considered to determine what a business should be classified as a micro, small, or medium enterprise. While the government has jumped into action with a series of stimulus announcements intending to boost demand and supply, majority of MSMEs continue to face adverse effect and impact of the pandemic. Due to the factors of demand slowdown, supply chain breakdown, and labor shortage, MSMEs are also finding it impossible to get their operating cycles back on track. Overall, the MSME sector is seeking support from the government for its special status and its unique problems. While some of the issues dogging the sector are long-standing, the pandemic and subsequent lockdown has worsened most of its problems. IMC's 2-day seminar on what MSMEs need in the current economy will help us get insights on issues faced by the MSMEs and what needs to be done. We have with us eminent and distinguished speakers who would share with us their thoughts on the same. Before I conclude, a few words about IMC. The IMC Chamber of Commerce and Industry is an apex chamber of trade, commerce and industry in the Western region with a membership base of over 5,000 members and over 150 associations affiliated to it. Together, it represents an advocate's interest of over 4 lakh businesses and industry establishments across the country from diverse sectors of industry. Thank you very much.
Thank you, Mr. Poddar. I now invite Mr. Arijit Basu, Chairman, IMC Banking and Finance Committee and ex-Managing Director, State Bank of India, to present the introductory address. Over to you, Mr. Basu.
Thank you very much. Thank you, Mr. Poddar, our President of the IMC, for his initial remarks, which very clearly laid out, what this seminar is all about. And I would just add a few things. I think, COVID has really hit India very, very badly, and like the rest of the world. And as it happens, different sectors are coming out of the problem. But MSMEs, these are smaller units who don't have the wherewithal to bear the brunt in the manner in which larger corporations can bear. So it is in this context that we felt that, and there was some requests coming in from various MSMEs that they wanted guidance. How is it that banks look at them? Why is it that some MSMEs are able to raise finance from banks and NBFCs, whereas others are not able to? And while we were discussing this in our Banking and Finance Committee and in one of the IMC board meetings, and a thought came up from the Digital Services Committee that, in today's world, MSMEs increasingly need to adopt technology and the benefits of digitalization. They need to understand how the ecosystem is very quickly changing. And therefore, it was felt, Mrs. Jankhana Desai is the president of the Digital Committee of IMC, that we would organize something jointly. And a very interesting kind of program has been laid out. And there would be 5 panels in which a few would focus entirely on how to reap the benefits of digitalization. So I hope that those who will log in and participate in the panel discussions, which are spread over 2 days, will benefit from this. And I would like to thank the IMC Secretariat for the excellent manner in which they have been able to get everyone together. And of course, thank the speakers, some of whom, as we will see, are the most eminent and well placed to speak on the different subjects that we will ask them to speak. So with this, I hope that we will have a very good 2 days ahead of us. Thank you very much.
Thank you, Mr. Basu. To address us next, I invite Mrs. Jankhana Desai, Chairperson, IMC Digital Technology Committee and MD, KServe BPO Private Limited, to update us on the initiatives taken up by the IMC Digital Technology Committee. Over to you, Mrs. Desai.
Thank you so much, Selvi. Very good afternoon to all of you. And I believe Mr. Poddar and Mr. Basu have already covered all the ground. So I will not go there again, but I would just like to, on behalf of the Digital Technology Committee at IMC, thank you all for being here today, for participating in this wonderful seminar, which Mr. Basu, Mr. Singh, Mr. Singhania have all put together so brilliantly. And I should not forget to thank Bharti, who has also tirelessly worked in the background to make this happen today. Big thank you to all the eminent speakers who have agreed to come here today to enlighten all of us on various topics that we've been struggling to understand. I myself I'm so looking forward to all the panels today, and I'm hoping to take a lot of value back from here. I also thank our President, Mr. Poddar, and Mr. Mangrolkar for enabling us and for creating a conducive environment so that all these committees could come together and work together for the single aim of working or bringing more value to the MSMEs who are our members, and our associate members also. The IT committee have come up with various programs besides the talks and the events that we've conducted. We've also conducted an awareness program called the ART, which is assessment of the digital standing of the MSMEs today. It will also take you to a recommendation level of which are the gaps and what you should feel and where you should focus on in the coming times, and probably some trainings if required. We will take this up in one of the panels that we are doing today. I'm sure Uday will take us there with Sumit and his inputs. And to encourage the MSMEs who have already undertaken this journey, we are coming up with an awards program in the month of April, 23rd April. You could mark the date in your calendars, and I'm sure Selvi will put up the link there. So any of you or every one of you who have who have taken some brilliant initiatives on the IT side, on the digital side, which I'm sure you have, many of you have, please apply for these awards. These are completely merit-based and are only undertaken to encourage and bring the initiatives in front of the corporates and the industry at large. So thank you very much again, and I hope you enjoy the ensuing panel discussions. Thank you.
Thank you, Mrs. Desai. Now we move on to the first panel session, MSME, Debt and Equity Funding for Growth. To moderate and initiate this session, I invite Mr. Arijit Basu, Chairman, IMC Banking and Finance Committee and ex-Managing Director, State Bank of India, to take over. Over to you, Mr. Basu.
Good afternoon, and thank you once again. It gives me a great pleasure to be given the honor of moderating the first panel discussion of this MSME event. And as you are aware, we have some stalwarts of the financial services industry who will be with us or who are already with us and who will be taking us through the next 1.5 hours. So how we have planned this is around one hour or so or a little more, we will have discussions and on certain aspects of MSME, primarily related to how they can fund their business and what are the risks that the financial institutions perceive when they look at MSME. So to take us through this panel, we have with us Mr. David Raskina, the MD and CEO of Exim Bank. He, most of you would be knowing him. He's a veteran of Exim Bank. I think I would not recall whether he's the first from the Exim Bank cadre itself to become MD and CEO. I think that is the case. And I think for the last more than 35 years, he has been with that bank. He has a brilliant track record in economics. He's a postgraduate diploma in management from XLRI, gold medalist. And but most importantly, I think the way he has steered Exim Bank, as you know, it plays a very, very multifarious role, I would say, in the Indian financial institution. And hearing him and many of the clients that they have would be MSMEs, and how they can benefit from this would be really interesting. In fact, just on a lighter note, when we were in SBI, we used to envy Exim Bank because I think that is the only institution which had the capacity to raise foreign currency debt at a rate which is slightly better than SBI. And because they were even more quasi-sovereign than what SBI was. Thank you, Mr. Raskina. We also have with us Mr. Rajiv Anand, again, a stalwart of the banking industry, the ED for corporate banking for Axis Bank, and he had the same role for retail banking. And as you know, Axis Bank has really come back in a very, very strong manner over the last 2 to 3 years. He's one of the most focused, dedicated. I've had the opportunity to actually work with him over the last 2.5 years on various corporate accounts in which we had to, work together or interact with each other. And he has a very, very good understanding of credit and how risk should be managed. And we have been able to take very good decisions, I would say, relating to many of the difficult corporate accounts in the last few years. Again, a very accomplished person, chartered accountant by profession, and one of the pillars on which Axis Bank is running today. Thank you, Mr. Anand, for joining me.
Thank you for your kind words, Mr. Basu.
Yeah, and of course, Asim Dhru, he is the MD and CEO of SBFC, which I think now it's known as SBFC only, but when it started, it was known as Small Business Fin Credit. So again, entirely focused on MSMEs. He again, bright, and I would also say young, because compared to at least the three of us who have been introduced initially, he is much younger, but he has a very vast experience. He, in fact, set up the agricultural business and had a big role to play in the SME business of HDFC Bank. And as we all know, everyone is really admiring of HDFC Bank today and the way they have grown their credit book. And in those years, I think he has come to SBFC only 3 or 4 years ago. But just prior to that, he has been one of the players who have helped HDFC Bank to come to this level. And in SBFC, I think the people who have invested in SBFC, they have huge hopes on him and the team that he has built. And again, I have personal experience because of the way that we had to interact when we were in SBI. And we have done a lot of things together, including a very, very important transaction. He's carrying his team very well, and it is one of the good performing NBFCs, which is coming up very well in the last 1 or 2 years. And I'm sure that he will also have a lot of things to share with all of us as we go along. Thank you, Asim, for joining. Mr. Yogi Sadana is our 4th panel member. Again, I have, I think, just had the occasion to meet him in a panel or somewhere, but unfortunately, I don't know him personally, but a lot of people know about him. So again, the institution that he heads as CEO, Cash E, these are the type of companies which is completely transforming the financial landscape of the country. You know, on apps, you are doing digital lending in matters of seconds and minutes. And if not anything else, they have made the banks wake up. You know, the bankers also are now taking steps to try and have similar products and services. But this fintech revolution that we see is, I think it is only at this beginning. And as the years go by, the kind of transformation that is likely to come is virtually, you know, sky is the limit of the kind of change that can come. And Mr. Sadana heads one of the finest institutions in that space. So thank you very much, Mr. Sadana, for joining.
So Mr. Basu, thank you for your kind words, and thanks for having me as well for part of this panel.
Thanks. Thank you very much. So what we propose to do is that maybe, you know, we have 4 speakers. So after I just give a few initial remarks, in the first round, I would request all of you to, you know, speak about how you feel MSMEs can really take advantage of the schemes that are being floated by the banks or by the government and things like that. So if I can start with Mr. Raskina, especially because, you know, you are heading Exim Bank, and your general remarks itself will be welcome because you understand the MSME space, but particularly, you know, on where, what are the challenges that they face when they have to deal with overseas suppliers or clients or whatever, and how they can mitigate that, and how would Exim Bank become more comfortable in, you know, funding them? If you could start off, please.
Thank you very much, Mr. Basu. Thank you, in fact, for your kind words of introduction. Very kind of you. Yes, given that State Bank is number one in just about everything, it does give us a little bit of pleasure that in one small area we can be a little bit of a headache to State Bank. But jokes apart, Venkat and I are great friends, so we were coordinating right through the deals to make sure that we don't scare the market off by coming together. But thank you for this question. This is something which we at Exim Bank have often grappled with. How do we take MSMEs to the international market? I'm going to go a bit off on a tangent at this point in time. We often talk about finance as being a constraint for MSMEs, and yes, of course, there's no doubt about it. But I would put it to you and to the members in the audience that finance is not the problem. Finance is a symptom of the problem. Why, after all, is it difficult for an MSME to get finance? That is the question I think we need to be looking at. Given our exposure in many parts of the world, to me, the one point which stands out is the ability to scale up. If an Indian company wishes to target the international market, and the international market cannot be tackled by a separate line or a separate approach, it has to be part and parcel of the core operations. In that case, scale is important. The big buyers of the world, and most of the buyers are big buyers in the international markets, are not interested in small lots, small production runs, small shipments, small restocks. They have large items in mind. When they're looking for scale and when they convert numbers into dollars, a typical MSME does not then cut a very great figure because the numbers look way too small. Part of the problem is our own definition. In India, as Madam had pointed out, we just scaled up the definition of MSMEs earlier during 2020, but it is still small. If you look at the uppermost limit, that is the medium industries, its investment in plant and machinery up to 550 crore and annual turnover of up to 250 crore. Now, believe me, that is still peanuts. First of all, an asset definition is very odd because you have a range of industries in MSME. To prescribe a standard asset size, frankly, is meaningless. But if you look at China, China has a definition for MSMEs of a unit with up to 3,000 employees. 3,000, ladies and gentlemen. That's the size of one of our large firms here in India. The turnover ceiling for them is about $50 million, which is something like 350 crore. And if you apply an asset linkage over there, it's something like $62 million, which is 10 times the asset limit in India. So where is China and where is India? Now you can say China is a bigger economy, but an MSME is an MSME is an MSME no matter which country it is. If you look at the USA and the EU, the numbers are even more stark because obviously they're developed economies. So clearly something is going wrong because we are looking at an MSME as someone who starts small, but we are not looking what happens after that. How does that MSME scale up and grow? Because if that MSME remains at that level, he is never going to grow and he's never going to be a realistic player in the international market. If you cast your mind back to 2019, the economic survey which the government of India had brought out, they came up with this concept of dwarf industries. I'll just read you out the definition. It says a dwarf industry is one which employs less than 100 employees, has been in existence for more than 10 years. So it's been around for more than 10 years, but it still employs less than 100 people. So you can say it obviously not done a great deal of growth in that time. Such industries, these dwarf industries, account for 50% of all firms, but only 14% of employment. So 50% of firms are giving you just 14% of employment. These are bizarre numbers. Conversely, if you look at the other side, that is firms which employ more than 100 people and have been in existence for more than 10 years, so obviously they've been growing well, they account for just 10% of firms, but 50% of employment. You can look at value added, you can look at whatever. Clearly scale is an issue. Yes, we have to encourage MSMEs. Yes, we have to help them build up, but we can't stop and keep them small forever. We have to enable them to grow because only that is going to give them the economies of scale, the balance sheet strength, the financial wherewithal, which will make them strong players. And when that happens, finance is not going to be a problem at all.
Yeah, I think that's a very, very valid point because if you remain small, then it's a different ball game altogether. I think that would come more under the definition of micro industries, which have a different role to play. But if we are to make our products competitive, I think one of the reasons why Indian goods tend to have a higher price or are unable to compete in the international market is because they do not have the benefits of scale. So I also felt that among the recent announcements made by the government, the announcement of redefining the MSME space itself is very, very welcome. The only thing, the fear that was there was that will it get cannibalized? That is, the larger, in the urge to become larger, will there be some large units which will, sort of do various things to become smaller and therefore, so that is something, of course, that will have to be dealt with. But thanks for your initial comments. I'll turn to Mr. Anand, and from a banker's perspective, we have had this MSMEs under priority sector. So the fact that that is the case gives us some benefit in terms of risk management. And yet we know the challenges. Even before the corporate book started becoming bad, which was, say, from around 2014-15, MSMEs used to have a very high stressed asset ratio. Some of them used to be restructured and all that. So banks would, other than even in a public sector bank like SBI or the other public sector banks, we just did whatever was necessary to do. But my view is that MSMEs actually can be a win-win situation for both the MSMEs as well as the banks, in the sense that the MSMEs can raise fund, and more of them need to do that, because as Mr. Raskin pointed out, that we have 7 crores MSMEs only by number, but the number of good ones are less. So how is it that we can make many more MSMEs good? One is, of course, scale and size, but from a risk management perspective, as a banker, how would you look at it, and how would you tell the MSMEs, those who are participating today, to go about this?
Thank you, Mr. Basu. I think, the point there is very valid, that there are today something like 63 million MSMEs. So notwithstanding the point that Mr. Askina made, it is a long tail business. And it employs about 120 million people. And so therefore, to that extent, the fact that this is critical to us, the fact that they comprise about 50% of exports, 30% of manufacturing, it is a very, very critical component of the of the Indian economy. I think that is not under question. The question really is that if you look at these MSMEs, less than 10% of them take credit from the formal sector. So the rest of them, especially the long tail, is actually going to the informal sector, to money lenders, etc., at usurious rates. And as soon as you start to borrow at those sort of rates, the probability that your business is going to be successful or scale is pretty much impossible. So therefore, question one is, I think the size of the pie for all of us is huge. That there is no doubt about. It's just a question of how can we get more people into the formal sector as opposed to the informal sector. Like you rightly said, even ascribing a credit cost of even 3 to 4%, this is a very, very attractive business. I mean, if I look at our own credit business, our own MSME business, whether you look at from a RAROC perspective, return on equity, or just in rupees paisa terms, it's a very attractive business. Because not only are we able to lend to the MSMEs, we get their sort of current accounts, we do their other banking, etc., and therefore it becomes an attractive business. So the question to now ask is, how can we get this 10 to 25%, for example? And I think in that context, the government has done a lot of things as well, in terms of there is a formalizing of the economy that is taking place. And so therefore, the more that these MSMEs adopt this formalization, the use of digital payments, the use of GST, etc., our measures are in that sphere. And as these MSMEs get more formalized and as their incomes get more formal, the ability of the banks to underwrite them becomes much easier. And the ability of the banks to move from lending against collateral to lending against cash flows improves, because now I have data about your transactions. Now I have data about your GST who you're paying to, who you're receiving, etc. And I know how much of income tax, etc., you're paying, and therefore my ability to now underwrite you, not necessarily with collateral, but through the better understanding of cash flows, improves. And I think the more that we are able to push the formalization, the more is the ability of the MSMEs to come into the formal sector and therefore avail of the benefits of the formal sector in terms of lower interest rates, better banking capabilities, digital banking, etc. All the good things that all of us know about. And I think that, to my mind, is well and truly on. And in Access, we do believe that in the same manner that we saw this explosion of growth on the retail lending side over the last 10 years, the next 10 years should, if all things go right, really belong to the MSME sector as far as growth and growth opportunities are concerned.
Yeah, thank you. I think one or two points which came out from Mr. Anand's deliberation, I think all banks have been facing that. How do we get MSMEs to take maximum benefit of the new ecosystem that has emerged? Although GST is, still a work in progress, people say, but the data that is available from GST, it is not just the banks who can take advantage, it is for the MSMEs themselves to sort of push that forward. Because in SBI also, we have actually decided to move to a cash flow based lending, because we have realized that collateral based lending is of no use. And if an MSME or any corporate for that matter were to, start defaulting, the value that we can realize from that collateral really doesn't make much sense, and especially the time horizon that is required. So that is, the cash flow, the understanding of the business. To my mind, I think two or three important things, and Aseem will, I'm sure, speak a lot about it, is the business model itself that MSMEs themselves set up. And then how do they manage their cash flow and receivables, I think are extremely important. And there would be no one better than Aseem to touch upon this. So my request to you, Aseem, would be that apart from this aspect, which we just discussed, on how is it that MSMEs can reach out to the banks and financial institutions, if you could also focus on both what can be done by the banks and what can be done differently by NBFCs, especially keeping in view what you are doing, and how I know from anecdotally speaking to you that you have some wonderful clients and who have done well even during COVID times. So if you could let us hear about that.
Yeah, thank you, Mr. Basu. So first of all, if you look at data, it tells you that the banks are flush with funds. So first is, 5 to 7 trillion rupees worth of extra money has been parked with RBI at 3.75%. So clearly, that is not something that banks are in a happy position with. Their deposits are growing at double the rate at which the loan is growing. So are the banks willing and wanting to fund NBFC, to fund the SMEs? The answer is yes. They are looking at ways to fund SMEs. Retail loan has also slowed down now from the earlier fast clip that one was used to. And this is an area that has always been in the radar, because India is a nation of shopkeepers and small businesses. And we have lots of these small businesses dotting all around the countryside. And are banks interested? They've always been interested in MSME, whether it is foreign banks, whether it is private banks, whether it is state banks. So to that extent, first of all, the demand, the requirement from banks to fund this business is very much present. Then what is the issue? The issue is actually how businesses are run on the ground, because there are well-run businesses and there are not well-run businesses. It is not about size necessarily. There are excellently run small businesses, and there are very poorly run large businesses, and both the fate they meet is pretty obvious in both cases. Now what happens is that banks traditionally have lent against collateral because there was very poor understanding of cash flows of these businesses. There was always a problem in terms of the returns filed, in terms of information disclosed, in terms of the way information came, in terms of unaudited accounts that one had to deal with. in terms of reported numbers versus actual. And therefore, banks relied on collateral as a strong way in terms of financing these businesses. However, banks have also come a long way from them, based on various developments that have happened, what technology is enabled, data flow that has come out. Now banks have moved slowly away from collateral based lending to cash flow based lending. So that's a very positive development that's happened. Now let's look at how MSMEs have emerged across the world. In markets like US, where people who have not been able to align themselves with technology have gone out of business. So that is regular. I mean, if you today a small bookstore in New York, is shut down. Large bookshops in New York are also shut down. And the retail also is now getting a huge pushback, and the Debenhams and Barnes and Noble, they're all complaining. Because the business has shifted online, and some people have adapted to technology better than others, and that is how it has played out in markets like Germany. The high quality engineering, precision engineering products that they do, the SMEs there are extremely viable. It's a beautiful business model there, that works so well, and some of the German SMEs actually do much better than the large corporates themselves. So it is about what segment you are present in, and are you in touch with times. For example, today, if you are in any business, say you are in manufacturing. Now, if I was in manufacturing today, I would look at the PLI scheme that has been announced by the government. It's a wonderful scheme. It's a wonderful scheme that has the potential to change manufacturing for India permanently. So after 92, this is one of the best set of reforms that I have seen coming out, which is extremely positive for so many industries. If you're in pharma, if you're in textiles, if you're in specialty chemicals, it's a wonderful scheme to go after, and the incentives there are really mouth-watering. Exports as a market is booming. Today, if you see, the containers are not available despite the rates having gone up. A 20-footer container to US used to cost $1,400. It's now gone up to $3,500, and still nothing is available. China used to be $500 a container. It's gone up to $2,500 a container, and yet it is running to full capacity. So if you speak to small businesses, yesterday I was speaking to the Morbi ceramics units, and they are saying that we have had the highest amount of exports that we have seen in a long time, despite COVID. We are running at full manufacturing capacity and now thinking of expanding, because the construction business in India is now really going up. Lots of houses are coming up. PMFI has been a big success. Affordable housing has taken off in a big way, and that is following through. So what we are seeing is a twin tracking. We are seeing that the economy itself is slowing down at -8%, but stock markets are booming, and both could possibly be right, because the larger companies are deleveraging. The larger companies are focusing on better margins. The organized businesses are taking it all. They are growing at a much faster clip. The smaller businesses are taking a much larger hit for multiple reasons. One is that people haven't been disciplined in terms of managing their debtors. Today, if you see what is happening to small businesses, a lot of them have made a mess of debtors in terms of lending, giving out credit without understanding. See, any manufacturer today is also like a bank, is in a business of understanding their creditors and their debtors. So it is important that there is a discipline in terms of how cash flows are managed. And most small businesses have actually gone wrong managing growth, because sometimes when they are doing well, they take a lot of bank debt, they take a lot of debt available to them, and then put on more shops, expand territories, expand capacities, and then are unable to manage the outcome of that. Because usually one sees that a retail store does very well in one particular area. When they start to expand, suddenly the other stores don't really match up. I mean, the same thing that happens to even larger companies like Zara. Zara, what it does in its Phoenix Mills store, which was its first store, it still does not do in all the other stores combined. So and when a retailer gets caught into this, he experiences trouble. So one is the discipline of maintaining cash flow. Second is keeping up with technology, the quality of production. Today, a lot of manufacturers in India are simply not producing the right quality. They may be cheap, but people are not looking for cheap. People are looking for value. So are you really producing value? And third is the services business. Now, services businesses for SMEs are the maximum impacted by COVID, because a lot of them are touch businesses. So if you are in salons, you are in garages, etc. Those are high touch businesses, and businesses not yet come back to normal, travel, etc. And you may face a little bit of business difficulties, but the point is that things will have to evolve. People will have to understand and get into what they need to adapt to the new normal and the new way of doing things. If today, if you go to your banks, and make them understand what really is your business model, because one of the things is that MSMEs don't spend enough time with bankers. They don't really make bankers understand what is their business model, how are they planning to do things. You may be in trouble from various points of time. It is not that the banker is unwilling to help. It is just that when he doesn't understand and he sees bad news, he panics, and then he presses the exit button. So it is important that you take your banker along. It is important that you make the banker also understand what challenges you are dealing with and how he can help. So today, RBI has come up with exceptional schemes, be it in terms of restructuring, be it in terms of the ECL, etc., that a lot of people have made good use of and still can till March. So this is the reality is that COVID has affected everyone, and from GST to demonetization, and now this COVID has had one more impact on smaller businesses. But having said that, new opportunities are also being thrown up. And as businessmen, it is as it is for you, as it is for me. We have to understand that when the world changes, we have to adapt. Sitting and complaining is not going to help.
Absolutely. I think very well put. Asim has summed up the dilemma on both sides, very well. And these are the things which the MSMEs and the banks together can do to take care of them. In fact, I was thinking about what the steps that the government have taken. I think the majority of the ones where funding actually has come out has been in the MSME space. If you look at the breakup of the 20 lakh crores which they have given, I think 90,000 crore for the power sector is one which has made a very big difference, in the sense that the DISCOM receivables got cleared off by that. And the other one has been the GECL for the MSMEs. And I think what MSMEs and the banks now really need to work together, because without the MSMEs coming back and regaining the position at least that they had earlier, I think it would be very difficult to make the economy revive. So turning now to Mr. Sadana, who represents the new brand of financial services that is available. If you could speak on this dilemma that we are discussing for MSMEs, that they find it difficult to explain to financial institutions as to how they can become a better credit risk, and how financial institutions can bring them into the fold. And while you say that, if you could give an idea of how you are managing that dilemma when you are in the kind of business that you are in, and how digital lending can be a transformative experience for them.
Sure. Thank you, Mr. Basu. And I think to answer your first question actually lies in a lot of content with my other fellow members spoke about, like Rajiv and Asim. I think the problem lies that how do we convert this 10% people who are doing in the formal sector who are borrowing, and how do we convert that 10% to 25%, from 25% to 50%? So I think that's the key. And a lot of financial institutions, large financial institutions, are still looking at a very conservative way of underwriting these MSMEs, right? So which would include looking at their cash flows, looking at their income tax returns, looking at their GST returns. But the problem is that all of this only starts to arise when you are in your third year, fourth year, fifth year of operations, where it will not be a single bank, but there would be an option of multiple banks which are available for this MSME to borrow from. But I think the key question remains that what is the option for this MSME in the first year, in the second year of operations, where the books are still being not audited. He's still setting up operations. Because it's a small setup, there is not a lot of institutional equity investors which are available. So this promoter maybe has put in his savings, or he's collected some money from his friends and family to invest into his business. So I think that's where the most large part of the problem remains, that how do you get an MSME who's just starting their operations in the first 6 months, 9 months, 12 months, 18 months of their operations, who have still not set up are still in the build out stage, how do you help them at that stage, right? So I think one of the key to convert this 10% or 12%, the number which is out there in the industry, to 25, 30% is that how the large scale financing institutions and other NBFCs which are funding to MSMEs can look at underwriting requirements beyond the normal underwriting requirements or the classic underwriting requirements of vetting a company, right? And in that, I think the government and the regulators can play a large role by looking at that. Can they provide the guarantees, or can they provide some subsidies from a credit risk standpoint to the financial institutions to lend money to the early stage MSMEs in some format or the other, right? Because the problem is that you are again in a vicious cycle of sorts, that in the first year of operations where your cost is high, your revenues are not peaked up, you have a sunk cost which is still not fully recovered, and on the other side you don't have financing uh, because people are looking at your GST returns, people are looking at your income tax returns which are still not filed, right? So it all creates more stress for the promoters, more stress for the management, because they have higher cost of interest which they would have borrowed as against an institutional debt. So I think the amount of debt which could be available, or the amount of partnership financing which could be available in the first 6 months, 9 months, 12 months, 18 months, is very critical for these MSMEs to not only flourish but also set up in a very, very effective way. So those are my thoughts to think about, that what are the challenges that MSMEs face. I think beyond the fact that they do not have a proper underwriting history for themselves for a large institution to look at them. The other problem is that while these companies are scaling, they also sometimes don't have a proper management team, right? For example, they might not have a CFO or a corporate finance function who would go to people like Rajiv or to Mr. David and say that, look, this is the company, this is what we are trying to do. For these purposes, we need the money. Create a fancy cash forecast, which a lot of these bankers would be very excited about. So how do these people create all of this stuff? Because they're still very niche, they're still trying to solve a problem for themselves, right? Thinking about going to a banker and pitching is not the most easiest thing in the world. If somebody as an MSME tries to contact Rajiv, I think that's not going to be the easiest thing in the world for that person, right? So I'm just trying to say this from a consumer, from an MSME standpoint, that what are the challenges that people face. Not trying to be a critique, but the problem is that, again, that how do we move beyond the conventional way of underwriting? Can there be a scheme from the government to see that uh, can the creditors be supported for the banks so that they become a little bit more liberal in underwriting? The problem is not on the third or the fourth year, because at that point of time, you'll have multiple institutions to lend. The problem remains the first 12 to 18 months where this person does not have a balance sheet, is in the early stages of incorporation, has a setup cost which is not fully absorbed, and may not have also reached his break-even or profitability point. So how do we support this MSME in the first 12, 18 months? I think that's something that we should look at. From a solutionizing standpoint for credit, and how does technology look at it? I think what we are doing as Cashy, and of course we are not lending to MSMEs, so we are not on the business of what Asim is running. We are providing short-term short-term financing or short-term solutions to people who are working with MSMEs, right? So there could be employees of the MSMEs or other private limited companies which are not the top-rated A-class companies in India. How do we finance their needs, right? Because again, the problem comes on the other side, that there'll be a lot of people who would be ready to finance a retail loan to a employee of a category A company. But when it comes to giving a retail loan to a consumer who is working for an MSME, where does that person goes, right? As the challenge of the MSME, the same challenge is there of his employee as well, right? So it's not only the employer which is facing a problem, but also the employee is facing a problem. So we are trying to solve the problem of this employee by not only looking beyond his credit, right? So look at an example where you start a manufacturing process, or you start a services company. What you'll get as a first lot of employees, other than the promoter group or the management team that you set up, you'll have some young graduates coming out, you'll have some young engineers joining you. Again, they'll not be from the top-notch institutions. They might not be the highest paid employees in the company. So how do you solve for their credit needs? So that's the reason the technology in this business plays a large role. For institutions, the large institutions who are trying to solve the wholesale credit problem, and for companies like ourselves, which are trying to solve the retail problem, right? That how do you look at alternate ways to lend? Can you look at beyond the traditional classic underwriting models and look at whether the customer is genuine, whether the customer can repay you the loan with the right amount of credit, which is a credit risk which can be absorbed by the institution. So I think if you look at technology, if you can look at the early support which a lot of these institutions require, I think that remains the key to be solved, because I still believe once the MSME or the employee becomes a prime on the bureau records, then I don't think the credit is a problem. The credit is a problem in the first few years of once you set up. And if there is some support which is available at that time, I think you give the early nurture which is required for that seed to grow.
Right. I think you have placed it very well, Mr. Sadana. In fact, I was trying to recollect our own experience. You know, one of the challenges that MSMEs and the smaller units, especially those who are in the startup phase, they face is, they don't want to have a large finance department with a CFO and things like that. And typically, if they are entrepreneurs, who have a tech background, engineering or technology background, then what happens is they do not have that understanding of balance sheets and things like that. And sometimes you can fall into wrong hands when you reach out to what we call the chartered accountant firms. Of course, some of them do a very good job, but some of them, chartered accountant firms or consultants, some of them, the way they work is, they try to make sure that it fits into the bank scheme rather than being completely honest and upbeat about the issues and problems that can come about. So that brings me to the point that there are mistakes which happen, which MSMEs commit in their journey. In the initial journey, it's very crucial, because if they don't solve those problems, then they can just disappear within 1 or 2 years. But even the ones who have started off reasonably well, have come to their break-even point and are trying to grow forward. So I thought that the next round of questions we could ask around what are the types of mistakes that MSMEs commit, and maybe sometimes we could also supplement it with the kind of mistakes that bankers also commit when trying to understand them. And I'll again go back to Mr. Raskina with his wide experience. And of course, in general also, as also how you feel about this specifically for the external sector, and the experience of Exim Bank.
Sure. Thanks. I was very intrigued by what Asim was mentioning about Germany, because if you look globally, your best example of MSMEs is Germany, the famous Mittelstand, which really contributed to the growth of Germany and made it the #1 exporter for many years, till of course China took its place. Now, what was the secret of the Mittelstand? And here this probably looks both at mistakes as well as maybe success factors, if you like to call it. How do you stand out from the crowd? As an MSME, whether you're manufacturing a component, a sub-assembly, or whatever goes into the main, you're most of the time, you're not doing a product on your own. You're making something which goes into somebody else's product. How do you stand out from the crowd of people who are already doing that? There's several answers. Now, one of these is clearly a quality certification. There is always a certain amount of doubt for the smaller industries because their capability to invest in R&D, their willingness to spend money on getting quality and other related certifications is less. But with a certificate of quality for a product, for a process, for environment, and so on, that is a tremendous way of distinguishing yourself from the crowd and building an entry barrier for your competitors to struggle against. That this could be product quality, it could be process quality, it could be environment, it could be anything, but it makes you stand aside from what others are and make sure that the product you're making is something acceptable. Let's go beyond that also. Where are you going to get the money from? And this point came out both from Asim and others. You cannot make the mistake of merely pricing or trying to succeed by being the lowest cost supplier. or just offering long credit terms in the hope of snatching away business from a competitor, you're going to pay for it in the long run. We've seen it in India. The infrastructure industry made this mistake. They went pell-mell into road contracts on a boot basis. They gave ridiculous terms of financing. They gave ridiculous terms of recovery of money, and we've seen what happened with them. I've seen a lot of MSMEs make the same mistake. Try and undercut the next person, offer a longer credit term, offer something free of interest. There's nothing which comes free in the world. Sooner or later, you're going to pay a price when that quality is not going to be accepted, when your bill is not being paid on time, and then you are facing the pressure of paying your own bills down the line. Perhaps the biggest, and something which I probably have to be a bit diplomatic in the way I'm saying it, but I've seen too many MSMEs try to make a success on the basis of what I would call tax arbitrage or regulatory arbitrage, which is a polite way of saying that you don't pay tax, or you pay a lower tax, or you avoid some kind of regulation. Now, that is a short-term strategy. It might work in the very short run. It gets you off the ground, it gets you running, but it's not going to last you in the medium term, because then there's going to become a race to the bottom with everybody else in your competitive class following you down. That is not the way to stand out. And these are some of the mistakes which I've seen MSMEs make. Mr. Sadhana also mentioned, and I think that's a very valid point, you need to keep your banker along with you. A banker at the end of the day is a generalist. He's financing units in textiles, in engineering, in chemicals, in pharmaceuticals, and services, you name it. He cannot possibly be an expert in all these businesses. He needs to understand what are your business drivers. If he understands your business drivers, then he has the patience. He has the patience to stick with you even when times are not so good. He knows that there will be a storm coming. He knows how to deal with that storm. But if he is not aware of your business dynamics, if he doesn't know what are the key drivers which keep your business going, then as was rightly said, he's going to panic and pull the plug. So the MSME, more than the bigger person, has to be a partner with the banker rather than merely a customer there. So it's probably a little bit loose, but this is what I would say is what we have learned from our experience.
No, absolutely. I think from the perspective of the other banks also, I can share a similar example. The only point that MSMEs might say is that, we would like to partner, but sometimes the understanding from the bank side is not as intense as it should be. Yes, there is a challenge there as well. We know that sometimes, at least in large banks, we have one particular branch or unit looking after a large number of clients and not being able to give attention. So it has to be a situation, but I think banks are also changing in the sense that I can share for SBI, because they had publicized it while I was still there a few months back, that one thing that was felt in SBI was that there are less people on the ground in spite of having an MSME. So we have decided to, across the 80 regions in the country, have a middle level senior officer as an AGM who would be looking after the SME business for that particular region. Early days now, but I think it stems from that aspect that the connect between the MSMEs and the partnership building that is necessary, doesn't happen to that extent. So, Mr. Anand, the other things that MSMEs or the banks, other mistakes, so to say, or improvements that they can bring about so that it becomes a better situation, or how it can be a win-win for both of them, given the fact that you can have very good margins, possibility of margins, as corporate lending, virtually we now operate on zero margin other than what we get from non-fund based business. In that scenario, this is what is the bread and butter of the banks. And yet we don't, many MSMEs seem to feel that we are not reaching out to them. So what can be done, and what are the mistakes that they make?
So let me make some, sort of general comments and come to the more specifics. I think one is, to the point that Mr. Sadhana made, is who's going to give them money in the first 12, 18 months. I think that is not a job of the banker, in the sense that that is really, sort of venture debt, so to speak, and venture debt in really small, tiny companies. That is not really the job of the banker. But having said that, I mean, I think we need to find ways to be able to get money to these people in the early stage. Point two is, I think we've got to recognize the fact that if you look at the CIBIL data, even in pre-COVID, and the point that you made, Mr. Basu, as well, is that NPL levels in this sector are in the vicinity of 12-13%, and therefore one could argue that there is a high level of mortality at the MSME level, but at the same time, I mean, maybe the bankers are not doing enough due diligence, and therefore, or don't understand the business, and therefore, the high levels of NPLs is what is actually playing out. If you look at what Axis has done, is basically we've split the MSME business, because each of these is very, very distinctive. The businesses up to 15 crores of turnover, it sits in retail, very retail oriented. I mean, ticket sizes are 15 to 25 lakhs, and there the underwriting is more rule based, cash flow based, etc. And then as you start to go higher, there is another bracket of 15 to 75 crores, where typically ticket sizes are 1 to 2 crores, and then the higher, which is more like mid corporate. And in each of these, let's say we've got specialists who understand the business to some degree. And the only way, I mean, I don't think the banker will be ever able to have a complete understanding of each of these businesses. And so therefore, ultimately, you've got to diversify. So what we look at is that there is geographic distribution, there is sectoral distribution, the ticket size is controlled and managed, and in that manner, you can diversify the risk away because ultimately this is a very, very granular business, and that as the sort of, if there's a issue in a particular region or a particular sector, the impact on the overall balance sheet is not material. Uh, as far as the MSMEs are concerned, I think there are, I mean, basically 2-3 things. One is, and Mr. Askina very, very diplomatically and politely put it, but I think tax fudges and trying to do more and more of your business off balance sheet, not the off balance sheet as in derivatives, but off balance sheet, so that you don't pay taxes. Whether it used to be the erstwhile sales tax or income tax and GST, is one of the key sicknesses, I would call, within the MSME sector. And I think as the economy gets more and more formalized, your ability to run businesses of this nature, tax arbitrage, as Mr. Askina called it, is getting more and more difficult. And I think the more that you keep off balance sheet, the less is the probability that you'll get money from the formal sector. And as I mentioned in the previous comments as well, if you're not going to get money from the formal sector, your ability to grow is pretty much zero. And so therefore, then you've carved yourself a little niche, and you'll probably stay within that. The second is in terms of the business itself, and I must say that through COVID, as I've spoken to MSMEs, medium-sized entities, the level of adaptability and resilience that they've actually shown has actually surprised me. So therefore, they've been able to pivot their businesses away. There was this company that I was speaking to, 60-70% of his business was going to Italy. Italy had pretty much shut down, but he was able to pivot that business away very quickly, away from Italy, and has survived and thrived through COVID. So let us also not underestimate the resilience, adaptability of the Indian entrepreneur. And I think if you put the right enablements in place, the ability of the Indian entrepreneur to thrive certainly exists. And so therefore, I would argue that as long as you understand your business, understand your supply chains, understand your customers, and understand the risks that you have either on the supply side or on the demand side, and you're diversifying that away, you're in pretty good shape. And the last one is really, in this day and age, if you're not digitalizing your business, it is inevitable that you will be in trouble. It may not be today, it may not be tomorrow, but in sometime in the future, somebody digital is going to come and disrupt you. And so therefore, are you thinking about how you can digitalize your businesses? And it's not about creating a digital experience on your own. There is such a wonderful startup ecosystem that has gotten built even in India. It's just a question of reaching out into that startup system for you to be able to find solutions that will be able to help your business. So, financial indiscipline, uh, understanding and diversifying both your supply chains as your customers, and three, digital and digitalization are the three key issues that any entrepreneur should be worried about.
Yeah, I think again, I fully kind of relate to what Mr. Anand said, because we had the same experience rather in State Bank. And yeah, financial discipline, fortunately, I think the financial ecosystem at least is changing, or has significantly changed over the last few years, starting with corporate defaults. It has changed for the larger corporates, but I think everyone has realized that things are, different, that you can't have, whether you call it RERA or IBC, they are all efforts at transparency. And I think the MSMEs have also realized that this is the new normal. And the good ones always realize that. They succeeded. But the others also have realized that this needs to be done. Without that, we can't go forward. And digitalization, of course. In fact, in the last round, I thought we will speak a little more on what kind of, how digitalization can help us. But I'd like to come to Asim on, Rajiv very well put, some of the pitfalls or the mistakes that are committed. If you could highlight some of the, the good MSMEs in your experience, either in the bank or in your current in SBFC, who have done, I mean, I'm not asking for names, but what are the kind of things that they have done, even at an initial stage, which has helped them to grow and which has enabled you to fund them, more with a lot more confidence?
So conceptually, the basic concept of lending is to understand unit economics of a business. So but when as a lender, one looks at unit economics of a lot of businesses, almost 80% of proposals that I have seen in my career, I mean, the business shouldn't exist in the first place. The guy is just surviving because of various other reasons, but it has no future. Now, as I'm a custodian of public money, and I'm not there to support businesses. I'm there to take care of my depositors. So it is very important that, and I have not yet seen a good business not getting finance. So we keep saying that SMEs don't get finance, MSMEs don't get finance. It is not about MSMEs getting finance or not getting finance. It is about a good business. MSMEs have not been able to build. A lot of them have built very good businesses. But the foundation of that is unit economics. That if whatever you are making, you are a mini cement plant, you are a mini steel plant, what is your USP? What is your margins you are making? What is the money you are taking home? So first of all, the point is that, are you only living because you are, not billing something and somebody else is billing, and therefore you make that 20% tax in between? Is that the only reason why you survive? Are you producing at the right quality? Are you investing in technology? A lot of businesses don't invest in technology. As things change, I mean, you see what happened to the mills. There were so many good textile mills in India. All of them, went down. Why was that? And the majority of that is because they refused to invest in the technology change that happened. Then what happened? We ended up exporting the entire textile industry to Bangladesh. Instead of exporting textiles, we exported the whole industry out. So the point is that, the Indian manufacturers also have to understand that you have to produce at quality. What happens to exporters? I mean, Mr. Asquina, is a better judge of this, but what is the biggest problem exporters face? That they have, people don't trust them. The quality of goods being supplied, is not what it is purported to be. So it's taking shortcuts. This whole concept of jugaad, that has unfortunately got into our mind. There is only one way to do something, and that is the right way to do it, and that is always the painful way to do it. So if you have created a business, the first need of a business is to there should be a raison d'etre of the business. That why does it really survive and why will it thrive? After that, trust me, you will have a line of bankers at your door. Today, bankers are hat in hand. What is my business? Every day from morning to night, I go on the roads looking for businesses I can finance. So it is not that, finance is a problem, but, if I look at, 10 proposals, barely one, needle in a haystack I find, which is worth financing. So to that extent, one is that please make your business financeable. Finance will come, don't worry about that. The second piece is equity. People have to understand that certain businesses need large doses of equity. If you are in that kind of business, you need to have venture capital, or some form of tie-up which allows you that kind of money. You cannot expect that you want to build up a business where you have to invest 100 crores and you expect 70 or 80 crores to come from banks. It just doesn't work like that. If you are in that kind of a business, you need to bring in that kind of capital. Now, if you do not have the capital, like for example, I started my business, I don't have that kind of capital, to start this kind of a business, but then I have to find financiers, investors, who I tie up with, to ensure that when I go to borrow from my banks, I need to also produce the right debt equity ratio, and I need to produce the right return on assets and return on equity for them to finance me. The third thing is that, I would encourage people who have not yet read it to read the book Good to Great, by James Collins. And, it talks about how organizations and people sometimes are good, but as they transition to greatness, most of the people fail. Why do they fail? Why do so many companies which are very good at a small level fail as they scale up? Because they do not make the kind of investments that you need to make to get there. And that investments are many. You have to get your finances in order. I mean, today, in HDFC Bank, our biggest struggle was to just get a stock statement and thing on time. Now, what kind of a business are you running? You want to borrow 100 crores, and you cannot give me a stock statement on the first of the month. How difficult can it be? Why do I have to follow up with you to get that stock statement? Audited accounts. Why don't they come on time? Why does it take you so long to get audited accounts out? So if you want to deal with public money, you have to do it responsibly, and that discipline has to be there at your end, whether it is through a CFO or through a chartered accountant, whatever route you take. But if you want public money, then you have to have the discipline to assure the lenders that their money is safe. The reality is that today, look at what happens in bank boardrooms. There is a discussion on how to grow SME finance, and in MSME forums, there is a discussion saying that why are banks not able to come forward and help us do more. Now, what is the meeting ground? The meeting ground is only one thing, that you produce something which is of high quality, which has demand, and you keep pace with technology to ensure that your tomorrow. Because when I lend, what is my concern? My concern is I look at your yesterday and I look at your today, and I also must be assured that you have a tomorrow. So as long as you can assure me that, why would I not want to lend? That's my business. That's what I do every day.
Yeah, thanks, Asim. I think you summed it up very well. And it's very important for MSMEs to bring that confidence among the banks. And one opportunity I think probably we missed out discussing is that now with one of the things which Atmanirbhar Bharat, I have at least tried a lot to understand what really is meant by this. I think and Prime Minister also tried to explain this by saying it's not inward looking. It is more external looking. So the opportunity that now will come for MSMEs will be linking to supply chains and the global supply chain. So the prospects are immense. But as Asim said, financial discipline and this urge. So I'll also give one more example in which we in banks face. When we started asking for these cash flow statements, in the COVID time, they understood that cash flows statements have to be given. If there is one statement which is available, even if no one is working in the company, it is a cash flow statement. Because without that, the company would shut down. He would know that this is the money that I have got into my account. It is true for an individual also, and this is the amount that I have paid out of my account. It is true for everyone. But in normal times, when initially we started asking for more data, and specifically, asking them for cash budget and stuff like that, I got a feedback from many of the branches that there was a whole lot of reluctance from the MSMEs to supply. I said, why should that be? Because this is the easiest statement to perhaps give. So I'd like to ask Mr. Sadana on, because you have experience of the digital landscape, if you could give some thoughts on how MSMEs, we have talked about it a little bit, on how MSMEs can take advantage of this ecosystem, and what are the things that they can do uh, which can enable them to become stronger in financial terms, so that they can then get more money and grow their business.
Sure. So thank you, Mr. Basu. I think Asim mentioned it as well, that there is a large startup ecosystem which has been created in India, and you don't have to think about creating everything from ground zero or reinventing the wheel which already has been done by somebody else. I think as MSMEs or any startup which is coming out, they need to take advantage of the technology and the products and services which are already available in the market, take advantage of those in a way that it can increase the efficiency of the systems. It can increase the productivity, or if it's a manufacturing setup, if these are services, using a technology platform increases the scalability of the system itself. So rather than thinking that, okay, we need to start from ground zero, how do we use the existing landscape of the technology, of the innovation which has already happened and which is available to the advantage, I think is key. Secondly, I think the other thing sometimes people forget about is that in the that what's the mode that you're trying to create, right? As far as any new any new MSME which is there to create, is there a specific problem that a consumer is facing, and hence you're trying to create a solution around it, or this is just complementing what something is already available? And then you become then it creates a problem that how do you make this business as profitable? How do you have positive cash flows which can allow you to borrow and get bank credit in at the end? So I think the key is to take advantage of the system which is already built out, not always think to create something from scratch or ground zero. There is a lot of startup ecosystem which has been created in India as well. Take the advantage of that and see how you can create a mood for that company. So if you're not able to do or solve for a consumer need, you can spend as much money, whether you raise from equity or you borrow from money lenders, or you borrow from bank finances as public money. There's no real answer to it till the time you don't fix the real solution with which you are creating this company for.
That's right. I think we've covered a whole lot of gamut of areas, which confront the MSMEs, and some thoughts have been given. It's not that they are coming out for the first time, but when participants get together and hear them right from people who are on the ground, it makes a big difference. Before we open it up for questions, let us hear each of our eminent speakers sum up what they wish to finally convey to the MSMEs. So again, maybe I'll reshuffle the order, have Mr. Raskwina have the last word. So we can start with Yogi. Just to sum up what you wanted to convey to MSMEs, because this is a seminar which is meant for them. And then,
Right.
of course, I have a few questions which we will take up.
Sure. Thank you, Mr. Basu. So I personally believe that startups and MSMEs are the key for India to go to the next 5 trillion economy, which the Prime Minister and the government has spoken about multiple times. Right? It is probably the largest employment generator after agriculture. So it employs a whole lot of people. Has great contribution towards the GDP, has great contribution towards the exports. How do we put some growth drivers into it? How do we make sure that there's right amount of financing which is available to this sector? And how do we make sure that the entire ecosystem is built around the MSMEs and the startup culture which is there in India, so that it can fuel growth, it can increase the overall employability of the nation, it can continuously contribute towards the GDP, and will also help a lot of people to get back post the COVID situation. We have all of us know that the country and the entire world has gone through a lot of mess with the aftermaths of the COVID. There are large corporates which have downsized. So people should, so there should be a hope which should be created amongst people that, look, if you have lost job and if you have some talent and if you have an idea, here is the resources which could be made available to you in a definite shape and format, which can help you to grow. And once you grow, you'll always help the other large part of the society to grow as well. So I think if you put a package together around this, I think we'll solve a large portion of India's problem, which is unemployability, and making sure that people with relevant skill sets get a job which they want. So those were my thoughts, and thanks again.
Yeah, very well put. I think Aseem, you've spoken very well, but if you can sum up, how will MSMEs gain from this seminar?
So I think one is acceptance of the fact that the world owes you nothing. So don't. I know this whole talk about the government should do this and somebody should do that. None of us are here to actually help you build your business. We are all doing our own business. You build a good business, and we will come after you wanting to finance that business. So I don't think you need to worry about financing. I think as an MSME, you must worry about why do you exist. One of the biggest problems in India is what I call the A1 Chikki of Lonavala problem, that one guy does well, and then there are 20 fellows with the same name, next to it. So that's how we built Sri Ganganagar, and destroyed all the steel, in that area. That's how we went after cotton ginning in Kadi. We create this, Me Too products, around, and people get into things without really understanding whether they are really creating value or contributing. So if you focus on building a good business, while there is a lot of turmoil right now, there is also a lot of opportunity. For the first time today, MSMEs actually have an opportunity to get equity. Today, there are so many venture capital, early debt guys, so many angel investors who are all looking for good solutions. And it does not need to be digital. It doesn't matter. Whatever is it that if you are producing at quality, scale, and also how many businesses can say that they are producing quality at scale? If you are able to build that, whether you're in services, whether you're in manufacturing, it doesn't matter. You will find enough people to back you in equity. You will find enough people to back you in debt as well. So financing is not going to be the big elephant in the room. The big elephant in the room is that or are you really building a world-class business? Because also ran businesses, are now going to go out. The fact is that more and more India is moving towards organized industry, and over a period of time, most of the small businesses will wind up. Most of the small shops, will find, just as small farming is not a good idea, and it is not economical. Small businesses, very small businesses, also not a good idea. They are at subsistence level. Just because the guy is sitting on the galla, he's thinking that he can get by. But eventually, he will be replaced by the bigger industries, more organized industries, delivering quality and comfort to customers. So the real question that everyone today, in my opinion, must ask themselves is that, is my business that I am building really going to stand the world-class standards that the world expects of me? If the answer is yes, financing, believe me, is going to be the least of your problems.
Yeah, I think plain speaking, but it is true. And value creation, I think, among the things that Aseem said, whether two things, whether it makes business sense for me, that I have sufficient margin for myself, and for the even more important, for the customer, am I creating value? Because if you are not doing that, then at some point of time you will get into trouble. Mr. Anand.
I completely agree with everything that Aseem said. One is ensure that you have a strong and viable market for your product or services, as the case may be, post-pandemic. And two is build a healthy balance sheet and working capital to support your business. That will allow access to credit and access to credit easily. So you build a good business, money will come. I think I tend to agree with Aseem as far as that's concerned.
Yeah, and finally, Mr. Raskina, an overall perspective on what MSMEs should do.
I don't think there's anything I can add to what Rajiv, Aseem, and Yogi have already said. So let me once again go off on a bit of a tangent and tell you about something which Exim has done to help MSMEs on this. We've come up with this new program called Ubharte Sitare, which is a rising star. What are we trying to do? We're trying to identify an MSME who has a successful business plan. His product is doing reasonably well in India, but he's not tapped the export market. Or if he's tapped the export market, he's doing it in a small way. He's not going to the big paying market for various reasons. He needs a better quality of product. He needs better packaging, whatever. So we've come up with a multi-pronged approach. Now, debt, everybody's giving him debt. Rajiv will give him a loan. Asim will give him a loan. I'll give him a loan. Big deal. I'm also offering equity. Together with SIDBI, we're setting up an alternative investment fund which will provide equity because, and the point came out in our discussions, quite often without a sound equity base, how are you going to leverage it and raise your money? At the same time, you don't want to lose control as a promoter. So fine, this is Exim and SIDBI. We're not in the business of textiles or mechanics or whatever. We want to help your business, which will help our business. So we're there to provide you equity as well. We have a grant component because I'm a profit-making entity. We've set aside some money from our profits to give you a grant support. You need to get, let's say, FDA approval. It's very expensive. I'm there to help you with it. I'll bear part of the cost. You need environmental clearance, I'm there to help you with that. You need child labor clearance, I'm there to help you with that. And if you're successful in doing it, I'll bear the cost. If you're not successful, I'm going to charge you. But there's a kind of a success fee with. And we have a hand-holding component as well. If packaging is your problem, we've tied up with the Indian Institute of Packaging. We'll try and work with you to see what is it you need to be successful. So what we're trying to do is a kind of a development. At the end of the day, I'm a development financial institution. I can afford to put time and money into something like this, which will bring up these guys. And as Rajiv pointed out, this is not for startups. I'm not in the business of financing startups. That is for venture capital. That's a very different business from banking. I don't think banks can do that. My point is, if you've demonstrated success in the domestic market, I'll help you demonstrate that success in the overseas market.
I think very well put, Mr. Raskina. And, schemes like what you have come up with, especially tied up with the entire ecosystem, packaging, etc., would be very valuable. And possibly we, Mr. Podar is there, what the MSMEs can benefit is by maybe having a special session by some of the people in Exim Bank, who can, if anyone is interested, Exim, SIDBI, we can also reach out to SIDBI. That would really be very, very helpful. I think we had a whole round of discussions today, and we had kept some time for questions. I just went to chat and saw there are not too many, but there is one gentleman who had asked a question right at the outset, Mr. Babulal Todi. So the first one was directed at me actually, because I said that, there could be a possible, now that the MSME definition has been changed, there could be a possibility that large corporates might, take advantage. No, there is no such, the answer to this is it's not that it is happening or this requires to be stopped. But it is, what I wanted to convey was that the mentality should be to grow. The mentality should be for smaller firms to grow, have a business which creates value, have a business which is aspirational, and not the other way around. As many of our eminent speakers said today, the mindset should not be that how do we take advantage of the various benefits of the various schemes, whether it is a incentive scheme or a restructuring scheme. Sometimes we in the bank used to think that some of the MSMEs are working, started with the idea that we will get into restructuring at some point in time. That mindset needs to be changed. That's the only thing I had thought. The other one is, he has a question, Mr. Sadana has put forth the real picture of the problems faced by MSMEs. How do you solve them? And he's saying that the banks ask for collaterals of the house, etc., for an MSME. How would that be taken care of? And then how do MSMEs overcome this? So I will not take it because I am no longer a banker. So I would ask Mr. Rajiv Anand to answer this question.
You are more of a banker than all of us put together, Mr. Basu. No, I think you've got to look at it in the context of the fact of the various things that we spoke about today, including the fact that NPL levels in this segment are very, very high, and justifiably so, isn't it? I mean, these are sort of relatively small businesses, very vulnerable, and therefore mortality is high. And as Asim said, I mean, we are not in the business of, I mean, we have a fiduciary responsibility with this money. And it is, if we are going to lend this to somebody, we've got to either ensure that it is a business which is generating the cash flow and you are able to lock those cash flows in some manner, or you've got to collateralize. And I think as businesses get bigger, typically collateralization becomes lesser and lesser. I don't think this problem is going to get solved very, very quickly.
Yeah, and but I think the banks also are changing their mindset. It's that even with collateral, they may not be so willing to finance, in future, and it will be cash flows. If public sector banks have started also thinking on those lines, I think that will be a change which will come about.
And
So,
I,
yeah,
and I think, Mr. Basu, I think basic banking tells you that the first line of defense that you have is the cash flows of the company. Collateral is only the second line of defense. And so therefore, if your business is, just to go back to the point that Asim made, if your business is poor, but you have a large house with which you're going to collateralize that loan, it's not going to help. And
absolutely.
so, and so therefore, just comes back to the same point that build a good business, finance will come.
Yes, very well put. I think we have two persons who have raised their hands. First was Mr. Jagdish Parekh, I think, of Bimal Pharma. If he could ask his question. And we have one, of course, Mr. Anand Singhania, who's the chairman of our business industrial panel in IMC. So first, Mr. Parekh, if you are there and you can ask your question.
Yeah, please. I am audible, sir.
Yes, please go ahead.
Thank you very much to IMC and thank you very much to all the panelists. I am banking today with the SBI since last 20 years. Correct? I am from MSME. We have discussed many things about MSME. Some speakers say, no, bank will always finance you. Don't think of finance. It will come automatically if you make your business sound. Some little bit I am disagree with this, because in the month of October we had same webinar wherein all the officers from the Calcutta region were there for the same topic. I will tell you over there. See, basically in all the branches where you say SME branch of any bank, say in that branch, is there any SME officer who will take care of all the SMEs, all the problems? No, I say no, because they are all officers. They are basically compliant manager. Something to be compliant, they are always busy in their job. If SME walks in the bank, he says, I don't have time. SME will go back. For SME, MSME, they require the quick replies. And particularly, I am sorry to say, Mr. Basu, sir, in SBI, so many layers. How SME can survive? SME, what we require is an immediate reply within a maximum 24 hours, or 48 hours, not more than that. Because we get opportunities very quick, wherein we have to say yes or no to the business. If the bank will take so many time, business is gone. How it is possible? Then I am telling you today, unless and until, if you keep one nodal officer in all the branches where you say SME branch, then he will listen only the SMEs, his problems. Then he will represent to the higher ups to get the quick reply. In that seminar, one Mr. Dr. Soumya Kanti Ghosh from Calcutta, he was there. Then Mr. Shastri Venkateswara, he was there. Then Mr. B. Raghunatha Rao, all were there. All they noted my point peacefully that yes, we agree that there should be one nodal officer who will listen to the SME only. He will not have any compliance things. No, sorry. If someone is making compliance things for the customer, he won't be able to listen and understand the problem of SME. This is very much clear. I am telling you, if somebody can make a note of this, it is good. Now I think 3 months passed. What has happened? Nothing happened. Second thing you said that Mr. Basuji, that some SMEs are taking finance, some are not. This is the main problem. We require immediate help. And MSME, there are two types of MSME. One is the highly qualified and other group is non-qualified. Now, for non-qualified SMEs to make the documents of their own, it not
Yeah.
wherein national officer has to support how to make.
Mr. Parekh, if I may intervene, because there is
please.
one more question. No,
Please.
I understood the import of your question, and I will respond also, since you specifically mentioned SBI, and no one from SBI is there. So one is, your point is well taken. In fact, in the course of my deliberations, I had also said that some of the large banks, and the feedback that you gave, I will pass it on to people in SBI. But so two things will happen. One is that, as I said, all banks would like to have a structure and like to have personnel who are experts. Your experience is not being very good. And if that were to happen, I think typically what happens is such customers, if you have a good business model and if you are doing well, SBI would lose customers like you. They would go off. Today, there are enough opportunities. Everyone is expanding, and they are not waiting for SBI or the other public sector banks. So SBI needs to respond. I do agree that SBI and any bank needs to respond fast. But I think the other side of the issue that was raised by Mr. Asim Dhru and Mr. Rajiv Anand, that the banks would be able to support and need to support very fast, but they also need the customers to have an understanding that the way they run their business, the way they have their financials done, in case in the midst of COVID, we were very, very pleasantly surprised, as some of the other speakers have said, that many of the SME units, even the smaller ones, had actually conserved cash and done a lot of things to make sure that they themselves are protected, and then reached out to the banks. And we had no qualms whatsoever about giving. State Bank had a 10% emergency line. Then the government itself announced an additional 20% line. So, but your point is well made. It is indeed important that the banking system is well geared to be responsive and do respond quickly. About your experience with SBI, I will certainly communicate it to the concerned branch where your account is, so that and the people who supervise them, so that that can be taken care of. I think we'll move on to Mr. Singhania, who would probably have a very valid point to make on this entire MSME, because he's very experienced.
Thank you, thank you, Mr. Basu. I must compliment the entire panel. I mean, really very interesting and very, very valid points. Mr. Raskina, you mentioned about Mittelstand, so I just want to mention that the Indian Merchant Chambers, we have an annual conference. In fact, the last one was called Make in Mittelstand, and we had very good sessions. So this year also we have a scheduled one in April. We'd like to reach out to you and partner with you and see how we can take this thing forward. I just have one query to the panelists. One of the big challenges for the MSME is that working capital. Working capital is getting blocked, at all sides. And now recently under these COVID conditions, commodity prices have gone through the roof. So, I mean, the MSMEs, which are just about reviving in many sectors, are getting grappled with huge inventory costs. And on the other hand, the problem is that the recovery of debt is not happening. We have a classification that you have to mention how much money you owe to small scale, how much you do this and that, but there's no way for this money to come back. There's no proper, analysis or payment happening. So is there any suggestions you can give to MSME sector where, they can be... Sorry,
Sir,
I'm not sure when I was muted. So...
hello, you are unmute. You're unmute.
Okay.
Yeah, your question was clear. Just at the very end, I think for a second it had gone off.
Okay.
Yeah.
So anybody, how do we ensure this liquidity issue, to the MSME?
So Mr. Raskina or Rajiv, anyone could take that question.
I'm not sure as a financial institution, I really have an answer. To my mind, the answer does not lie with the MSMEs, it lies with the large corporates, and let's be frank, with the government also. There needs to be a culture in India that a debt is payable and payable on time. I'm talking of receivables. The problems, the way I see it, that an MSME faces is less on the inventory buildup, but rather on realization of sales, where a bill is given, credit is given of 30 days, 60 days, but that bill is not paid for even twice that period. And quite often you find the middle and larger industries essentially managing their cash flow and their working capital needs on the back of the MSME sector. Now, this is a very unsavory development, and I really do not know what is the answer. Internationally, you have a rating system with Dun and Bradstreet and others who will then publicize the names and the ratings given to large corporates who do not pay their bills on time. But then there is a double-edged sword. We do have the TRED system in India. We do have CIBIL and Dun and Bradstreet, but many MSMEs are reluctant to report their experience for fear of losing business. I'm sorry, I know the problem, but I do not know what is the solution to this.
I think very well put. These are complex issues which will get sorted out in the days to come. I think we really have run out of time, and we just have maybe a minute to sum it up and thank the panelists as usual. And as I had expected, each one of them has made points which are more and more relevant, and I've been part of the system, and yet, today also I thought I had learned a lot of things. So to sum up, I think what was said today is that MSMEs have also understood the changes that are coming in the ecosystem, and the ones which have not need to understand. Two major changes in the ecosystem which are coming to my mind, and summing up what the others have said. One is making use of the increasing technological capabilities available, digitalization for their own benefit, how they can make sure that various things which are available in the system like GST returns, etc., they can use to show the strength of their business. The second is financial discipline. I think it came out again and again that the financing institutions, whether it is a bank or an NBFC or an Exim Bank, and even we have SIDBI who are not present here today, or even the digital lending institutions, they will all support, provided they are confident that the business model is viable, number one, and number two, they are intent on seriousness about growing their business and on financial discipline. And there are challenges on the side of the banks also, like one of the questioners asked that, in a large, he is transacting with a large bank like SBI, and according to him, he's feeling he's not responsive. These are issues that do come up. But I would think that in a marketplace where now most banks are keen on MSME, earlier we used to say that private sector banks are not so keen. Those days are gone, and private sector banks would be very happy to take over good MSME business. So in that scenario, in case a large bank is unresponsive, they will lose that business. So thank you once again to Mr. Raskina, Mr. Anand, Asim Dhru, and Yogi Sadana for what was to me a very, very enriching and engrossing discussion, and hope to have you sometime again for some other session of IMC. Thanks very much, and thanks of course to the IMC team and to Mr. Poddar for this session.
Thank you for that greatly informed session. Now we move on to the next panel session, our MSMEs Digitally Ready, which will throw light upon digital readiness assessment, mentoring, in short, the DNA of a digital MSME, digital thinking. To moderate and initiate this session, I invite Mr. Uday Sanghani, Global Leader and Partner, BDO LLP. Over to you, Mr. Sanghani. Just a minute, sir. Just a minute. Yeah. Yes.
Thank you very much, Selvi. I really want to start by thanking Mr. Arijit Basu and the panelists of the very first session. It was just brilliant, very insightful, extremely informative, and a perfect start, for this 2-day event. So thank you very much to all the members of the first session. Thank you very much to the IMC leadership, for having added this particular topic to the event, because it's so very relevant, and almost all the panelists of the first session did reference about going digital. So we're really going to sort of get deeper into this particular topic, and we're going to sort of talk about what digital is all about, and why the importance and embracing digital transformation is becoming extremely important for your organization and your enterprises. So 2020 had a tremendous impact, on the way we work and sell. All the businesses that have come out strong have one thing in common, and that's their approach to people and technology, radically strategizing towards transforming themselves digitally. Every organization's goal, especially MSMEs, should be to fast track their digital transformation journey in 2021. And today's discussion is going to be revolving around that and the need to adapt it into the new ways of working. Mr. Basu talked about the online lending, and the artificial intelligent algorithms. So we're going to sort of briefly touch upon that. We're going to talk a little bit about the importance of getting digital into almost every area of your business, whether it's front office transformation, middle office, or back office, whether you're a manufacturing organization or a services organization. So we will have a solution-seeking conversation about digital transformation, the needs, the challenges, and we will touch upon 5 key themes: the importance of digital, the approach that you should have for embracing digital transformation into your corporation, and what should the journey be looking like, the workforce readiness and the people culture, which is equally important, the whole importance of digital operations, whether you're in manufacturing or in services. And of course, it's very important for you to be ready in case of any failures, risks, or issues. So to discuss and deliberate this, I have a very learned panel today with me. My very first panelist, let me introduce him, is Mr. Ullas Deshpande. He's a partner in the consulting practice of PricewaterhouseCoopers. He has more than 2.5 decades of experience in industrial automation and digital solutions, spanning around oil and gas industry, utility, chemical, metals and mining, and discrete manufacturing. His core expertise is in smart manufacturing, delivering various technology-enabled solutions like manufacturing, execution systems, supply chain management, digital twin, which is really a fast-growing concept, data analytics and advanced process control, operation technology, IT and OT integrations. He has authored a number of thought leadership articles on software solutions in process industry, and he's certainly a speaker at various industry events. So thank you very much for joining us today, Ullas. My second speaker is Mr. Biswajit Bhattacharya, who's a member of the panel. He's a partner and automotive industry leader at IBM India Private Limited. He's a subject matter expert in digital solutions, Internet of Things, IoT, blockchain, cloud and mobile, and Industry 4.0. Over 2.5 decades of overall experience, he's a member of the IBM Worldwide Automotive Industry leadership team and worked in multiple countries across the globe. So there's going to be some very exciting insights that we're going to be getting from him on what's happening in the different pockets of the world and how we compare to some of these areas, across the globe in this particular MSME segment. He has been an advocate of the following themes: make product smarter, participative, safe, vibrant, accelerate Industry 4.0 to provide impetus to Make in India, which is extremely important for all of us, creating superlative customer experience, He's also been a speaker at many industry events and business school. My third panelist today is Mr. Sumit Rajwade. He has got 20 years of industry experience working at rediff.com before starting his own consultancy services venture in data-oriented information systems, platform building. He's the architect of Rediff Mail, right? The very first web-based free email service from India, launched in 1998 and scaled it to 90 million registered and 250 million mails exchanged on a daily basis. He has won the CIO Choice of the Year award consecutively for 3 years. So he's certainly going to bring in a lot of insights, for us. We will not make it very technical for all of you, but relevant enough for you to be able to take back some nuggets from this session. He has later started technology platform building startup in hospitality segment, and he's currently acting as the CTO country leader for the Logo in Soft. One very important point that I would like to state that he's also a co-chairman of the digital committee at the Indian Merchants Chambers. So as I mentioned, there are going to be 5 key themes that we're going to be talking about. Thank you, Mr. Biswaji. Thank you, Sumit, for joining us today on this panel. My very first point that I would like to share with all the members who are today with us is, please let's make this very interactive. So looking forward to your questions in the chat session as well as in the Q&A section. And I will keep sort of referring to them and picking it up as we move along. My very first question here to Ullas would be, Ullas, digital transformation has been one of the most talked about topics, right, in 2020 in almost all the boardrooms. It's on the agenda, and it's certainly for a good reason, right? So my question here to you is, especially for all the MSMEs who still not yet embraced going digital or moving towards transforming themselves digitally, tell us, what is the digital transformation all about, right? If you could, in as simple words, explain it to many. And the second part to this is, why is it very important, and why is it that everybody is talking about going digital in today's day and age?
Yeah, thanks, Uday, for the question. As you said rightly, yes, digital transformation is one of the most talked, but I always say a little walked, or kind of a term. And this is not from India perspective. Basically, I talk about a global perspective also. And we're talking about MSME today, but even you look at it from the perspective of global in a large organization, it's still a journey. The digital transformation is still a journey. Just to kind of share some statistics, at the PwC, we conducted a survey for 1,200 organizations globally, and kind of a basket these all organizations into their journey for 4 kind of labels. We call as digital novice, digital follower, digital innovators, and digital champion. Surprisingly, and these are the 1,200 companies globally we are talking about, only 10% organization actually reach to the digital champion. And these are the Amazons and Googles of the world. We can talk about it. The point here is that it's still a journey for most of the organization, even a large organization. And we are talking about here is the MSME. So for sure, it's important that we make it a kind of unbuild it. What is this digital transformation all about? And that's our first question. So digital transformation is all about, I think, in an organization, let it be a manufacturing or service-oriented organization, you have various functions, correct? And how actually you run your business. If you really take it in a value chain from the first kind of a lead generation to your dispatches, there are various functions out there. And how each of them talk to each other. And that's where I think the concept of platform comes into picture. How much it's a manual, how much it's basically related to a dependency on human is there, and how much it's a process-centric. To put it basically, do I have a platform where if I need information from a different function, do I need to call someone? Do I need to send an email? All the information available to me, and I think that's also get to the data authenticity and also a transparency. So digital transformation for me is basically, if you look at it end-to-end perspective, is that how all your functions in any organization, they work together, having a single truth. And I think there is a full transparency, and the dependency on the people is less and more from the actually the data which is coming from the systems. That's, I think, the simple digital transformation. And depending upon the large organization or small organization, I think the complexity can change. But it's simply a platform where information is available, decisions are making together with the single window to the data.
Yeah, thank you. So Biswajit, just to sort of ask you your insights on exactly what digital transformation is all about. If you can just add to that, to have a connected enterprise powered by the new age technologies, is this a very expensive proposition for the MSMEs?
Yeah,
Or is there a good return on investment on this as we move along with time?
yeah, absolutely. It's a very important question what you have actually asked, and I often hear this question from not just from the MSMEs, even from the large organizations. See, now let's take a step back. I think I'll add to what Ullas was talking about. Why digital transformation and why it is now. Okay. See, number one, there's a huge paradigm shift, if I may call that, in terms of customer centricity, and in terms of the way our customers, whether it's a business whom we are selling, or an end customers like all of us, the way we expect the product and services to be delivered to us, it has completely changed. That's number one. B is that there is a huge amount of market volatility and uncertainty, and the last 1 year or 10 months is probably it shows it all in a way. And there is a huge amount of disruption, and which is also kind of going on in each of the product segment, in each part of the industry. Okay, there are new players which will be kind of coming in, create a new niche in the market. And see, I mean, and I mean, there are often beaten down examples of. I mean, I've been working with automotive industry for a long time, so many of my examples will be of automotive industry. So please bear with that. So whether it's an Uber or an Ola from an India standpoint, they came and changed the whole market. The way the automotive sale was happening in this market had undergone through a huge amount of change. The way the Zomatos or the Swiggies of the world had changed the market, the way the food business was kind of been driving in this particular market, and all of them have a huge digital component. So any business which is disrupting today, also coming, leveraging the whole digital platform in a big way. That's the second point. Third point, what I wanted to talk. And of course, especially in the larger organization, and slowly we'll see the same thing in MSME also. There is a huge talent shortage, or a talent gap, if I may use that term, and which is also driving the organizations to leverage technology to be more stable in their business operation. Now, what I wanted to say essentially is that digital transformation is no longer a luxury or an option. It's a necessity. If we talk in 2021, it's more of a necessity. But having said that, should I go full hog into kind of digitize everything of every operation of my business, every touch point in business what I have? So the answer is very clearly no. Probably we'll dwell more into the details as we go forward. But having said that, there has to be a very clear vision, or where do we digitize, and how do I get the return out of it? So there is a very clear thought process which has to be there for each and every business, and it's going to be very different for each of the businesses, each of the organizations. I'll say. So each of the organizations need to understand that part of the need in each part of their processes and various other touch points. See, there are broad guidelines in a way. See, we are already in the middle of the fourth industrial revolution, as they call it, the IoT 4.0, sorry, Industry 4.0. Now, from a manufacturing or retail organization standpoint, I'll look at a couple of the guiding KPIs. Does it improve my operational efficiency? Does it help me to gain in terms of productivity? Does it help me to save cost in terms of the overall cost to the customer? A clear ROI, or some of the organization might be using a term like ROC for each of those investments, what I'm doing. In some of the cases, there need to be some small investment which needs to come in. And the last important item also is, again, probably COVID is an eye-opener for many of us in this area, is a safety improvement. There's a need for the workforce safety to be it comes in the forefront because of during this pandemic. So these are the broad guidelines. Based on that, I think what needs to be understood how do we really go about it. And the good news is that there is a good amount of progress in the last couple of years. I mean, last maybe 2 years or so. I do see a lot of progress globally, and especially from an Indian market perspective. In some of the, I will use the term progressive organizations, even in the MSME segment, taken small steps in this direction and taking a benefit of it as well.
Thank you. Thank you very much, Biswajit. Sumit, I'm going to ask you to decode this a little further and take it down to its lowest denominator for our MSME audience. In the past, we already had a lot of .NET applications. There was a lot of software development. I mean, you've seen it, happen for your organizations. So what has changed completely in the last 2-3 years, especially last year, we can understand, the whole COVID experience. But why is there suddenly very much, so much of importance that's been given to digital transformation, and why the importance of the word digital when we already had, transformation happening in many other ways, right? Through either delivery excellence, industrialization, innovation, disruption of all kinds, software development. So is it the availability of a whole lot of different platforms today in the industry? Sumit, your insights would be very helpful here for the audience.
Thanks, Uday, and I'm happy to be a part of this panel. Am I audible?
Yes, very much.
Very good. Okay. So in my little journey of building tech platforms over 24 years, I saw 2 points where the whole thing transpired into a new avatar of how the word digital was looked as far as India or globally the whole world goes. India has been at the lead end for the development, but at the lag end for the imbibing of these techniques. So it's the land which produces the best of the code which has to be executed first outside the land. And then we adopted these technologies. See, the first change that happened, according to me, is the mobile internet. The whole concept of consumers trying to do their utility things on mobile. I can give you a simple analogy. I remember in 1998-99, when I wrote the email service, we used to have a site called as 123greetings.com. People used to wish each other by sending emails, New Year greeting cards. Do you hear this anymore? You don't. The whole concept of information exchange has undergone 7 iterations in last 25 years, right from the days of Gopher to where we stand today. And the biggest trigger point came when the internet in the country became subsidized thanks to the revolutions that was initiated by Jio, followed by many, and it came into the hands of every person. Android phones, the gray market, second-hand sale phones, and internet at the price of little above the water bottle price for consumption made the customers smarter. So if you ask me, the onus is on companies like us to cater to customers who are actually running ahead of us. Today, a customer says, "Oh, I have a complaint in banking." It's the case in my own life that happened. I was incorrectly charged a penalty for the moratorium which I didn't apply for. And I said, "Okay, I'm going to go to RBI Ombudsman and I'm going to write on Twitter handle on the bank." The customer is becoming smarter by the day, and the curve of digital quotient smartness of a customer is growing exponentially. And companies are now finding it difficult to cope up with the customer because there is a thumb rule of information exchange. If we do not know how to arrest end user expectations, end user is going to have unreasonable of variety of expectations. And that is a cusp where we are in. So if you ask me, digital transformation, all these things are very big words. I'm maybe a student of this, so I'm not authority to answer what digital transformation really is. But to my mind, it's the onus on us individually and collectively to cope up with the smarter customer, because a well accepted platform is always been a well seeded platform. Wikipedia started with 1200 editors. Facebook started with university IDs because they wanted people to upload their real pictures. So, transformation by keeping the man machine intelligence together and seeding it well for the early adopters, which is there in every nook and corner of the country now or in the world, is the onus on companies. So, if I have to put it in simple words, the ball is in our court. The customer is smarter. And it's our moral responsibility to respond to the smartness of the customer by building the necessary tools that can make his life more convenient. And customer retention and loyalty is expressed by companies using these means. That's how I'll put it.
Thank you, Sumit. Thank you. Thank you to all the panelists for really sharing your first set of views. My question back to you, Ullas. I'm going to now narrow down the question, right, to something that's very specific. You know, I've been also sort of meeting a lot of MSME clients. And my question to you, Ullas, would be, as an MSME, if I've been running a business for the last 2 decades, 3 decades, you know, it's a legacy business. I've been doing it very successfully. I have my own set of systems, but nothing, you know, very technologically advanced. The question that comes to my mind is, I've been hearing so much about going digital in 2020. What do I do? How do I embrace this digital journey? What should be my first few steps, whether I'm in manufacturing or in services? And is it something that I can, you know, take care of with my own set of technology experts within my organization? Or do I need to reach out to any consultancy firm? This is the question that's there on every MSME member's mind. You know, and also given, you know, we heard in the first session that the bankers are willing to sort of support and lend you a hand if you want to go digital. So the question is, how do I go about doing it? How do I embrace it? What should my journey be?
Yeah, thanks. And I think very kind of a pertinent question, Uday. I think every MSME will have the same kind of question. On the initial part of what you said, I think may not be the case post-COVID. This is the typical when I used to go and meet clients, and they used to say, no, we are running it from last so many years, and we are very happy. To the extent I can give one of the example, I went to one of the foundry kind of operations, and they have this very kind of a sophisticated welding operation as a part of their operation. And they said, this is the operator I have. He is with me for last 30 years. And it's a very precise welding, and he is the one who can do it, and blah, blah, blah. Post-COVID, I think the people have realized that you cannot be so much dependent on the people for so many reasons. One, initially you are suppose in a manufacturing operation, you are on shop floor. Someone is there for last 10 years, 20 years, you can just go to the guy and he will tell you, okay, do this, and problem is solved. Now suddenly when there is a section that you can have 30% people, you cannot have so many people on your shop floor, and you have to run your shop. I think then you understand, no, I think that people dependency is I cannot continue with it. So I think the post-COVID definitely I see, and the lots of discussion which I am having with the client, clearly perspective has changed. So at the initial part of that, people have realized that people dependency, and I also say this multiple times in my kind of a discussion, that if you look at the industrial revolution, India has missed the 3.0. Currently, we say we are in Industry 4.0. One of the reasons could be a cheap manpower available. So at that entire, the automation and the shop floor and manufacturing, we missed it. We always depend on the people, and our operations was very manual. The COVID has definitely pushed. And on top of that, now we are talking about we want to be part of a global supply chain. We want to be a kind of a substitute to the China. Unless and until your entire operation is digitized, there is a transparency, I think you cannot grow. A typical example I can give you, and I think which we can talk about it, a typical in case automobile. If you are, even you are a kind of a small company who's supplying, there is a too much of focus on track and trace, that I want to see that every component, when it coming to my car, where it is coming, what kind of a quality check they have done. So, and you cannot manage it if you are not a digital. So again, I will give that, we should also say the same thing. It's not a choice. It's must now for MSMEs to want to grow or to survive. I think three things digital transformation brings you. First, most important, which is important for MSMEs, is agility. When you are more of a technology driven, not a people driven, scaling changes, it's much easier because it is a technology available. Like we talk about the various kind of technology available. There's a digital twin. Even I want to change the line concept, I want to define new product. If I have technology and now depend on the people, I think the agility is definitely one of the important factors it bring in. Second is efficiency, the cost optimization. You not depend on people. When you're scaling up, the cost comes down when you have already invested into the platform. And the third and very important is the transparency. Because you are going to be part of a global supply chain, it's very important that data integrity, the visibility. Today, we are very happy when we know that Amazon guy has started in the morning and I'm going to get my parcel at 2 o'clock. Okay, we are very happy. And that's again goes to the customer centricity point we talked about it. So I think for MSME, I think this is must. Now, how they go about it is more important. Again, it is unique for each. It's not something that there's one size fits for all. And even it's not something that pure ghar ke badal dalunga kind of approach. The first approach has to be understand your key pain points. Have a cohesive strategy. A lot of digital transformation has failed because of the siloed approach. Today, I have a problem related to maintenance. So I go and get kind of some predictive maintenance solution, but it works in silo. And I think, again, I'm lost because problem is not there. Problem shifts from maintenance, maybe to the operations. So first and most important that have a log of it. We typically call that, can we take a step back and have a look at it, a cohesive strategy, a roadmap for my transformation. What are the key pain points? It's also important that each digital intervention you talk about it must solve some problem. It cannot be just modernizing my operations, which KPI it is impacting. So first that, and if you use the word strategy, it looks to be much bigger thing. No, it's not. It's a simple thing. It could be a small operation, but I need to have my roadmap that, okay, today I'm doing this business with the manual operations for last 2 decades. I want to transfer that roadmap for next to 2-3 years is very important. Once you have your roadmap, then you can actually prioritize it. Put it into the maybe a first quarter, second quarter, third quarter, go, but a bigger picture has to be there. The failure mode is that if you go in a silo approach, that today I have this problem, I go for some kind of a silo solution, and then you find that either technology is absolute or in overall schema, it doesn't fit. So simple answer that first have your roadmap for next 2 to 5 years. What kind of a digital strategy, what kind of a growth I'm going to have, and then have a prioritization to the digital interventions. While we talk about digital transformation, a people and process angle is also important. It's not only a technology basically you are going to adopt. You also need to make sure that you think about the people and the business processes also aligned to it. So I think simple one, how that approach for your organization ready can be done inside if you have the people, or there are so many agencies and so many startups and so many kind of consulting firms available. It may be good to get their outside in view. That is also important because they also bring in what's going on to your peer organizations. So sometimes outside in also help here, but that could be a first step. Have your roadmap prepared and then start execution it.
Yeah, brilliant. And what I really liked about the fact is that you don't have to go big bang. You can certainly step it and ensure that you have different areas that you need to prioritize within your enterprise, get digitized first, and then you can take the others, as a follow-on. Your views, Biswajit, to the same question, because I think it's very relevant for all the MSMEs on the call today.
Yeah, absolutely. I think Uday, you just said that. So what I call it is start small, but start now. Okay. So what I mean by that actually is that, and in fact that's something more of an approach which is working for many of the MSMEs as well as for the larger organizations. See, see in today's day, uh, asking for an additional investment for well, whether it's a digitization or any other improvement or a transformation thing is a tough call. Now, if you are able to do a small identify a small area where you can very clearly identify that uh, uh, and really go about digitizing that, go about transforming that part of the process and start getting the benefit early instead of kind of trying to do a full scale transformation. You pick up a smaller area where it's easy to do the transformation. And then the good part essentially in the digital world, the transformation can be done a lot faster. So what I mean by this is that earlier time, I mean, let's say 5 years back or 10 years back, a transformation, when we used to say we used to have a strategy, we used to have a implementation of the strategy, and then to be an adoption, and the whole process used to take long to start getting the benefit out of it. In this era of digital transformation, the whole thing has crashed. The whole timeline has really crashed, and people start getting, you can get the benefits starting in the second or the third month onward itself. So the point of getting start small is that you start getting the benefit early, invest that earning from that the benefit what you're earning into the next phase of your journey, next phase of your transformation journey, and you multiply that. And that's the typical process of agile building, and you start gaining the big picture. So what's important essentially is that I need to have a very clear clarity of my operations in my business, and and vis-a-vis that, what is my customer's expectation. To meet that customer's expectation, believe me, believe you me not, the customer expectation, as I think Sumit was talking about, that has changed multiple. It's I call it as a paradigm shift. Now, to address that changed customer need, what needs to be done in my business? Now, and then I create a clear roadmap that this is how I go about it. And this is a very clear success criteria for each of those small steps. So that I'm constantly measuring that success criteria as we go along, and start in reinvesting the benefit into this, so that there is no additional pressure on the business in terms of the cash flow or from an investment standpoint. But at the same time, I'm able to transform my business aligned to the new customer demand, and to that, which is important for me to stay relevant in my business today. Now, many of the organizations have done that. I mean, I'll give one example which I often been sharing with a lot of people. It's not from India, but a country which is similar to India, which is Philippines. And Philippines also has a very huge network of MSME organization. Now, one of the biggest issue in the MSME organization is how do you really kind of create a ecosystem of your customers, your various partners, including the financial institutions for various working capitals and other funding requirements, etc., which is there. Now, what they had done, they created a blockchain framework. It's called One Connect. Okay, It's meant only for the MSMEs. In that, the first step what they took in this was to integrate the MSME organizations and the pool of customers. Many of the MSMEs typically have been working with in a B2B environment where they have been selling it to another business, and so all the B2B customers or B2B ecosystem players came into the same platform, so that there is a huge amount of visibility there between both the buyer and the seller, and that's something which actually helped this organization to cut down on the overall time to market, and that in not just a kind of a cost saving, it was a kind of a revenue upliftment for most of these organizations. Then what they have done, they have integrated the other players, other ecosystem players, like other suppliers or various other partners into that platform, which helped them to cut down further time in terms of the internal processes, whether it's a supply chain process or a manufacturing process. At the same time, as I know that they have been also working towards kind of linking up the banks and other financial institutions into that platform, so that the whole invoice financing, working capital loans, all those processes are being simplified. And I think in the earlier session, we were talking about the transparency is something which is a key expectation as far as the financial institutions are concerned. Blockchain is a technology which provides a trusted data and a completely in a very, very transparent way. So that helps both the financial organizations to provide the finance to all these organizations based on verified data between both the buyer and seller. So now, I mean, the reason I'm giving this example essentially is that, see, blockchain is a technology otherwise have been looked at as a technology which is being leveraged by the larger organizations like the Walmarts or the big banks. But this is a unique example where it's working specifically for the MSMEs. They are the one who are the users and the proprietors of this particular platform. So this is an example that yes, technology can give you benefit. It need not be a huge investment. There are ways to handle this investment. This is in this particular example, I talked about the whole ecosystem of these MSMEs kind of came together to really co-create this platform and get all of them getting the benefit together. So there are multiple ways of handling the same problem,
Right.
but it's more of a necessity, as we say that for us to be staying relevant in the business now.
Right, right. Thank you, Biswajit. Sumit, let me ask you the same question with a little bit of a twist, right? So I'm now getting into the MSME's mind. They've heard Ulas, they've heard Biswajit. So one question that as an MSME that would come to my mind is, okay, I have now identified the key pain points in my business. I know exactly what I want to transform. I would like it to be frictionless. That's the next path. I don't know how to go about doing it. I hear about so many technologies in the market today. I hear about machine learning and get confused. I hear about cognitive services and get confused. I hear about artificial intelligence and blockchain and everything that we're talking about today. So there are just so many technologies, and there's so many areas of my business that I want to connect, right? And I want a seamless experience end to end. And as very rightly said, need not be big bang, but over a period of time. My question here to you is, what is the next step, right? After I've identified, do I need a good consultant to help me architect a solution to transform my business? Is it possible for me to do it by myself? How do I go about understanding all of these technologies? Right? Just too many terms in the marketplace, and some of them are very fancy terms that certainly intrigue me.
I agree. So it's a very, in our tech term, we call it, it's a NP hard question to answer. It's a very tough question to get a right answer. But I think at this juncture, it's best if I share some of the experiences that I carry in this domain. Uh, to begin with, one should not remove the human element out of this whole equation. As I think all of us must have seen that movie Sully, where the captain, who has never attempted an aircraft landing on a river before, lands it and says every single time you remove the human out of the equation fails. So, though whatever we say, our Indian context business, rather a global context also, is very human in nature. I'm trying to arrive at something which I learned over years of talking to these people. And you know that more than 79% of GDP in the country is driven by businesses which are family managed. We need to always look at the larger numbers and pictures so that the solutions become more widespread and effective. So I was giving a session in one of the institutes in Delhi, who runs a MBA course of FMB, Family Managed Business MBA. And I saw an average age of the audience was in the range of 25 to 30 years. These are the sons and daughters and in-laws of the businesses which are family managed in nature. And I said, why are you attending this course? They said, while we have high authority, it is our endeavor to stay relevant for the future. And now I'm coming to the answer in a calibrated way, keeping these two key indicators intact. The way one has to look at digital transformation is without understanding the business, providing a solution is writing a code without understanding the logic. One should never do this mistake. And that's one of the primary reasons why more than 70% of the deployments fail anywhere. India is not an exception, it fails globally. Unless and until you don't put your foot in the shoes of the company whom you belong to for solving this problem, the solution cannot begin. The immediate steps that one has to take, we call it a theory of 2 steps forward and 1 step backward. You keep thinking a lot, but you should also know what not to do. And that is the most important step backward. Some people take it as a hurt to a pride or a ego, especially people who are in consulting businesses. Of course, I can do this. Why not? That is not the right need that is going to get served there. So the whole concept to my mind is I have seen a human element from both the sides, the person who's implementing a solution as a consultant and the person who's representing the organization as a company. Ultimately evolve a frugal way to experiment. And you know, suppose you have a fantastic painting, what do you do with it? You buy a fantastic frame, you choose a good wall, you paint the wall, you make sure it is perfectly fitted so that the value of the entire, you can say, flat or that wall is enhanced by that painting. Organizations and consultancies have to envelop these two people. You will always see one developer being circled by 5 managers in any company, where there is one guy making changes which are instructed by 5 managers. This scenario has to change. The way the digital transformation in companies will happen is when people will choose where are we with respect to what we are supposed to do? What are other people doing in the same industry and where do we stand? And what is a common minimum program? You always take safe steps the way it's the way you trek. You put your first foot, you make sure it is affirmed, you took your second foot forward, and that's how you scale the mountain. To my mind, it is very important that rather than having 50 people talking to each other in a big conference room, you should have one FPOCs, what we call as first point of contacts, from either side, and pick up not more than 2 to 3 ideas and envelop the organization around them. And there are plenty of tools which are free, freemium, premium, paid, subscribed, or pirated available in this country to make sure you will achieve your objective technically. But what is lost in transit is, I give this as a famous analogy, a well-read but little lesser intelligent legal person will take any company's template and make it look like his understood template because that is what he feels is the safest way to go forward. An intelligent guy will read the template and figure out what is at risk and say go or no go. And those are the real people who make the projects execute better. So to summarize, I'll say it is very important to understand on the three dimensional radar to understand where is your main need lying. What are the industries doing which are like you to address is this the right need that they are addressing, or you are one of case who's creating a need in your head? And where is the future taking you towards? And if I may take 30 seconds to explain, this has been the endeavor at IMC also. And we created a tool called as digital ART, which is audit, recommend or report and train. And the whole idea here was not to train the trainer, but is to make the DQ, or what we call as a digital quotient of companies, come to a certain level where rather than looking at jargons, they look at the real need in a simplified fashion. So that is how I would address it in a simplified way.
Yeah, I think that is brilliant and good. You referenced ART because that's what Jankna Desai had said at the very beginning of the session. So good you brought it up. Maybe you want to just throw a little bit more light on this diagnostic tool that has
Sure.
been created specifically for the MSMEs and how it's going to benefit them.
Sure.
And Selby, parallelly, I will request you if you can just put it in the chat site, the URL, where people can go and try out the diagnostic tool for their own organization or their enterprise.
So the whole idea of digital ART came into picture where we saw that companies have to know what they have to know. So typical Johari window, right? I know, others don't know. I don't know, others know. Well, somebody has to bridge a gap. And especially for MSMEs, I'm staying in a metro city. There are 15 digital agencies which are at the round around the corner. I can go reach out. I can do all these digital media marketing strategies, automations, etc. What happens to the guy who's near Kudal, who's near Sangli, who's in the outskirts of Nasik? Where does he fit in all this picture? So we created this tool to specifically cater to three varieties of industries: manufacturing, trading, and services. It has more than 30 multiple choice questions. The tool is specifically designed in English as well as in colloquial Marathi, so that people who are filling the form can understand. You see the way Uber works. The elite hailed the cab and the non-elite served as the driver. So the tool is designed for the business owners who are not necessarily tech savvy to put their mind map out, which is going to aid the consultant understand what is the real need. In a later run, as we get more data, we'll try and publish research reports which are industry specific to understand what are the top go-to things for each industry, to overall improvise the digital quotient for companies to take the digital journey with a lot more confidence and lesser fear. That is the purpose of digital ART.
Thank you. Thank you, Sumit. And I would highly encourage, Selby has already put it in the chat. So there's a brief description about the ART tool. And there is a link out there. So I'll highly encourage every single member on this call, or those members who are not on this call, to kindly go and take this due diligence exercise. That will really give them a good report on where they stand and where they should be. Coming back to you, Ullas, can you just share with us and all the members today some of the case studies, right? Any specific case studies? We know large corporations, have the money and have the muscle power to invest, try out, fail, retry, and reignite their whole digital transformation journey. But for the MSMEs, every rupee spent is certainly needs to get them the return on the investment. So it's extremely important for them to hear about some of the success stories, and even if there have been failures, then what has been the cause for the failure, and how have those companies sort of got back onto the track. So that would be very helpful for our viewers.
Yeah, so let me give an example again from manufacturing. And again, this is a discussion with one of the CFO, the post-COVID time. Okay, and this is a sugar factory, and we are talking about and a sugar factory with the and then CPP power plant also. And I was a very kind of a surprise sugar factory in Maharashtra region has actually adopted a technology. They said we did our roadmap in 2015, and the CFO shared a very interesting statistic with me, saying that a typical hour size of the plant needs 700 people to run, and we run our plant with only 300 people. That's the difference. And I said it's a journey for us. We started in 2015, and basically these are very small things. Is like a first creating a data lake. Data lake again a big word. It's basically connecting all the devices, get the data. So either first all the people who are recording the everything manually, we just removed it. All reporting has to be a kind of on a simple dashboard. Took a very simple steps, and I think look at the way I think when he was talking with very pride that in a COVID we are the one who could really run efficiently because it was essential, hence they were allowed to run. But just because the number of people required was so less, they can really run much efficiently than others. And it's a sugar factory, and it's the process also simple in terms of their entire uh, plant processes are concerned. But I think that someone has taken a step much ahead in 2000, and I was really surprised because it's not up to post-COVID. It was I said 2015. He said we decided no, we want to make sure that we all our data should come from the machine directly, and kind of take a baby step there. So I think this is a very one of the relevant question. I can talk about some of the failures also. We talk about the success where the failure also, and I mentioned this before also. I think the failures are more in terms of where organization or the people try to solve the problem, which was they believe very critical tactically. Okay, and that's where I think because any process, okay, it's a basically there are interdependencies on the function. Even you make a one function very efficient, unless and until other functions are also kind of responding to it, you are actually just shifting the problem from A to B, and I think overall output will be same. And this is the typical example I will give about a critical machine was failing very kind of often, and they believe that okay, I will do sensorization of this machine completely, and kind of put a algorithm, a very simple algorithm to find a predictive maintenance kind of a stuff. Yeah, I think they did it. But then if you when they look at the data, overall data of production, pre and post, they could not find any much of kind of a difference. Because yes, this machine was failing because it was overloaded, but other are also not ready to take the additional load. So I think the problem was shifted that the inventory used to be piled up to the next machine and they could not handle it. And that's what I was talking about, a kind of approach to be a little holistic that, okay, what is the problem I'm solving? What kind of digital solutions are available? And have an approach which is more cohesive, that it actually not just shift the problem, but also solve the problem in totality. So maybe I think these are two examples I would like to kind of narrate here. One is definitely failure more from the siloed approach, and one someone has really started it much early, and the benefit they got in a COVID time, no one is aware that the situation will arise.
Ullas, let me pick your brain on some more case studies. Like, have you come across anything where you have IoT related edge computing or shop floor operations?
Yeah, okay.
So if you could share a little bit about that, the importance of cloud in the digital operations, and how things are moving towards the cloud without getting too technical, but maybe just at a very broad level, Ullas. That would be beneficial to a whole lot of manufacturing companies that are there on the call today.
Sure. Yeah. So I think let me give another example and very relevant for some of the MSMEs. And again, a very simple solution using image processing kind of a technology. Now, all this image processing technology, and this is again related to the automobile industries where the welding, the precision welding is very important. And there are used to be in a line, there has to be 3 different people, okay, who used to come and just check that welding is precise or not. And they solve a problem using a simple image processing solution developed by a startup company, not a kind of very high-fi or big organization, but it's just a startup company came, developed a simple image processing, which is basically just take the photo, check your the standard ideal condition versus raw photo coming from your shop floor, and just lets you know that it is a good or not, a quality check. A simple solution, image processing technology is used, and just two cameras and a software there. And actually, again here, look at the number of problems. The people dependency has gone down. It is completely driven by the technology, the process centric. Quality is such an important parameter which is solved, and you do have a database. You do have history of it. Okay, when you have more rejections, you can actually do the analysis that, okay, particular shift, I have more kind of failures. Is it because of the skill issue of the people? Do I need to change something there? So look at the kind of problem it solves and make entire your operation efficient. So I think that's another example I can give you. Very simple solution. Okay. The another example I know, the vibration kind. I know it's a cable company where a person used to come at every 1 hour, will put a hand and will check that, okay, vibration, how is the vibration, and based on that they will actually do the maintenance. Uh, the good part about today versus the 5 years back, the technology, the cost of sensors and all has really come drastically down. It's not a big kind of you need to big investment. You can put a simple two sensors, one at the kind of your vibration sensors and another sensor to which will tell you on and off your machine, and it gives you kind of a hell of the good results which will help you for efficient operations. So I think there are multiple. I can talk about the use cases. Another use case is always related to the track and trace of the people. In a COVID situation, people have used it very efficiently. Also help in terms of the safety. If the person is going very close to the machine, it can create alarm, and those are also very good solution. If you really talk about any of the SMEs, MSMEs, 50% people will be contract workers. Okay, I think there is very heavy dependency on the contract workers, and in the morning, the supervisor will never know who are the people turning out. So at least the 30 to 60 minutes are wasted only allocating the people, because he don't know who is coming and he don't know what kind of skill set they have. You are wasting a 30 to 60 minutes of your production time just because you do not have visibility of who are the contract workers turning out. A simple solution, I think, again, developed using the startup, where when the person is kind of swapping his card, he exactly, the person on his mobile know that, okay, these are the people are in, he can just allocate and start the work. And the time is almost 50% time is saved, which was wasted. So many use cases I can talk about the manufacturing, which are really, and now I can use big name to it. I can talk artificial intelligence, I can talk machine learning. We can use the big terms here, but these are the simple solutions are available, and MSMEs actually need to kind of put forward and kind of adopt them. And I can guarantee you that the amount of benefit they will get is enormous.
So Ullas, again, just one question before I go to Biswajit is, you give some very good examples. If I'm a business owner, I would like to know what would be the productivity approximately. I know it's very difficult and it's case to case, but approximately what kind of a productivity improvement can I see? What kind of efficiency can I see? Well, what kind of a cost reduction can I see? In what range, right? It will vary from company to company, but that is, I think, very important for them to know, as to what the return can be on the investment.
Yeah, absolutely. And I think I always say that unless and until ROI is defined and calculated, I think one should not kind of proceed for any of these digital solution. I can talk about the general term, and I think the OEE is term used very efficiently, or the mostly people track it, which is the overall equipment efficiency, and the range is 4 to 7%. Okay, we have seen improvement 4 to 7% in your OEE, which is the entire plant efficiency I'm talking about using the digital solutions. And the cost, I think 10 to 15% of the cost optimization, that's another metric. If you look at it, it includes both manpower cost and the other raw material and other costs are there. But 10 to 15% of the cost reduction, we have seen 4 to 7% of OEE improvements are typical benefit I have seen people kind of getting from the digital solutions.
Thank you, Ullas. Thank you. Biswajit, again, the same question to you. If you can share some case studies and probably tell us the efficacy percentages of some of these technologies implemented, in the solutions.
Yeah, absolutely. I think what Ullas was talking about is a perfect. We talked about start small, but start early with a clear, measurable outcome defined for each of those initiatives. I think these are those examples where the organizations are doing small work, but with a very clear understanding of the benefit what they are going to achieve and how that fits into the overall scheme of things as far as that organization is concerned. So few of the other examples, I mean, taking on the manufacturing industry itself. I mean, again, it's a very real life example of one of those smaller manufacturer of auto components. Actually, it's a tier 2 or a tier 3 kind of organization in the value chain. But they had a very clear journey, clear roadmap for their organization. So first, they wanted to monitor the machine performance to avoid breakdowns and lowering the maintenance cost. Few of the examples what Ullash was also talking about. So what all you have to do is that in your very critical machines to start with, you put certain energy meters, you put certain lubrication oil monitor sensors. That's what all they, and these are small investments, really speaking, because the cost of sensors, etc., has really kind of come down. And building a solution to monitor them. So that the first one essentially was that monitor, getting those exceptions, alerts, and take actions based on that. That action is still manual. Then they're taking it down, further down, to get into the whole asset utilization perspective, part of it. So you kind of start planning the downtime, so that you can start maximum utilization of that particular machine. Okay. And that again, you need to kind of start capturing more and more information about the machine, and again, linking up with your overall plan. The next thing was what they wanted to do was essentially that they wanted to centralize asset information in terms of the track and trace of the various asset. Once again, a small technology addition, but the benefit, you are kind of adding on to the benefit. And then getting into the aspiration part is taking into a predictive or a preventive maintenance situation where I start analyzing the data. As a part of the process, I'm start collecting a lot of data about my organization and start using the data. I mean, you can't do the predictive maintenance or any insight from the data from day one. You need sizable data. So as they have gone ahead in terms of getting small benefits, they've started accumulating a lot of data, and that's something, the fourth initiative what they have, which is aspiration at this point of time, they have not done it yet, is to leverage that in terms of predicting the failure of the machine based on the last performance. So this is, again, it's a very clear roadmap, clear vision, and with minimal investment from that standpoint. Now, see, what's important in the overall engagements like this are to focus on the outcome what I'm looking at. See, today I think we talked about cloud. I mean, I look at cloud it's like it's actually democratized the whole technology for us to leverage that. Earlier, if I need to kind of implement a solution, I need to buy certain software, I need to buy certain hardware. Those are initial investments, and there is to be a time in terms of making it personalized or for that particular organization. Now, with many of these solutions, what we are talking about, Ullash and I talked about, many of the solutions which are available as what we call SaaS, okay, software as a service. What it means essentially is that a minimum customization is really required for me, and I need to pay per use basis, rather than I kind of block a good amount of capital to buy this technology. I start using this technology and pay a money as I really use it.
Yeah.
So that really helps in terms of the initial investment required for doing that. It becomes a part of your OpEx cost, and the benefit what you are end up getting, your whole ROI. Earlier, when what you used to talk in terms of years, has really kind of crashed it down in terms of the months and the weeks. So these are the journey which we have been seeing, and that's a very clear direction I would like to see in the Indian MSME segment going in
No, no,
2021.
absolutely, absolutely, Biswajit. And I feel that the MSMEs who are going to be embracing digitization or digital transformation in this era will be at a much better benefit, because there are so many different platforms and options available to them today compared to what it was in the past. Some of these large corporations we think would be all beautifully digitally transformed, but to get all of those legacy systems integrated is a nightmare in itself, right? So when you start clean, start small, and you have the whole white sheet in front of you, you can really plan it out well, manage your databases well, manage the right platforms well, and certainly have a more effective transformation solution. Yeah, thank you, Biswaji. Thank you, Lars. Sumit, to you, maybe the same question, but some examples if you have from the services industry.
Sure. Before I go to services industry, I think it was a fantastic spectrum that was covered by Ulash and Vishwajit. But I'll try and add a small point which I learned and I really believed in it. And it's very important for all the companies who are into manufacturing units of any kind to look at the first baby step towards digital transformation, what it can mean to them. One possible way. Andrew Ng is known as a thought leader of machine learning and data mining in the world. He's been an authority. The same question was asked to him. What is automation? He said, automation in today's world is what human can do in 1 second. Allowing machines to do the job that human can do in 1 second is the perfect use case for automations, which will carry highest level of success in the industry going forward. And he gave a few examples. These manufacturing of plastic bottles, they figure out with the UV light passing, the bottle is perfectly been blown or it is off shape and they discard the bottle. Or in manufacturing units, they are trying to make sure the paper is passing in printing industry and suddenly the paper stops. Instead of human, there has to be an alert and the machine and the conveyor belt has to stop. So all the people who are from the manufacturing industry, if they can identify those use cases, which removes a human element which otherwise is needed for 1 or 2 seconds to make a decision of a kind, because essentially you end up making quantitative decisions in a couple of seconds, then it can be the perfect starting point for people adopting automation, which is inherent to manufacturing industry's digital roadmap. So side point, but coming back to the main service industry and the transformation, to my mind, it should all begin with people start looking at data. And there are 4 V's that data is governed by. Some people will get variety of data. Some people will get data in high velocity. For example, a service industry who's into a job of settlement of a particular or you can say pay slips or settlements of micro vouchers being sent at the end of the day basis, gets a lot of data in a shortened time, and they need a slightly different system than people who are getting variety of data throughout the day. So to my mind, it is very important that when people look to go from physical to semi-digital to digital, by semi-digital I mean use the traditional tools but put the data in the structure, put the process in a structure. You can use simple Excel sheets which are in cloud. You can use simple web indicators. You can use a simple mobile app to convey it to each other. You can use workflows within email also. And that also is a digital transformation of a kind. You really don't have to do heavy duty transformations to call it a transformation. The very fact that in the hindsight, you will all realize uh, emails are no longer messaging utilities. They have become your vaults. 85 to 90% of your desktop can be recovered by going through emails. You don't have to really take a backup of your attachments. They are all in emails in various shape and forms, and they have become your workflow systems. So automations and digitization can begin from taking these baby steps. Even Excel is not a bad tool according to me to begin with. But service industries must focus on these velocities, varieties, veracities of the data, which are the key V's that derive the data, and use these solutions which are fit for its purpose so that they can actually embark on something which is long lasting in nature. Otherwise, going too much back and forth dampens the spirit of any person, saying either this transformation is not for me or it's very time consuming or expensive. So I'll always say for service industries, their oil is their information because that's what they thrive on. And that's how they should begin their journeys, sure but small. And there is no shame in using traditional tools, but that itself is a first baby big step towards making some things work in this fashion. That's how I'll put it.
Absolutely, Sumit, well said. I mean, when we talk about digital transformation, just to summarize what all of the panelists have said, I mean, we're talking about front office transformation where you are communicating with your consumer, with your end user. It could be B2B related activities, it could be B2C related activities. There are plenty of platform available today for digital data capture, ensuring that you have data models available based on the data captured. It can be, and then making it omni-channel, completely integrated. So you could design your databases to provide you with that kind of analytics, and the value proposition for your own business. So almost all companies today, whether you believe in it or not, you will be pushed because the market forces are going to push you towards digitally transforming yourself to reach out to your end user customer. The middle office or the back office, we have a number of solutions available today in the finance and accounting, especially for the services companies. Your payroll, your HR management systems, for your supply chain, for your procurement. There are standard platforms available that can be tweaked by 20, 30%, 70% would be applicable to you by and large for all corporations. All of these are just a simple one that comes to my mind, is a company really wanted to, they had about 80,000 different vendors, and they really wanted to sort of integrate all of the invoices that were coming in from the vendors into the ERP system. So to make it completely frictionless, they decided to scan their invoices, get it scanned through an OCR system, bring it in, do some three-way matching out there, with the goods receipts and all of that, maybe throw out certain exceptions back to the finance manager, and then integrate it directly into the ERP after setting certain thresholds. So all of that is very much possible, and it really sort of, especially when you're doing your end close or digital finance, it makes life so much more simpler for your people in the corporation and in the organization. And you could have chatbots, so that the chatbots at the front end could talk to your vendors, so that they know exactly what's happening to their invoice and when they're going to get paid. I mean, they really don't need to then start disturbing you. These are some of the classic case studies. Let me wrap this session by just one more question to all of you, is about celebrating digital success. Okay, and how do you transform the people culture? Because digital transformation is not about technology transformation per se. As it's very rightly said, it's also about changing the people perception in your organization, the people culture. So maybe just a quick a sum up statement from all of you. Let me start with Biswajit this time. Biswajit, maybe if you could just sort of summarize it on that, and then I'll go to Lars and Sumit.
Yeah, absolutely. Uday, celebrating success is important for any such endeavors. And over here, as I said, that we need to have very clear, measurable outcome for each of those initiatives, and we should be in a position to measure as we go about the transformation or a digital transformation, and it should be a part of the culture, because it's a continuous process, and hence it's the organization, the senior members of the organization needs to be really careful in terms of building that culture of innovation, building that culture habit of innovation in the organization, and hence this process of measurement and measuring the success and celebrating the success has to be a process.
Thank you. Ullas? Yeah. Ullas, would you like to add to that? All
So
about.
I think that Biswajit covered, but I think the simple thing I will just say in our organization, the day when I think someone talk about a data point and other guys is not questioning it, okay, I think you have it, okay. It means the data integrity there. Everybody's looking at the same platform. It's not my version versus your version. That's a simple one. I think that should be a real success for any organization. Even I have seen the most matured organization also today. I think the discussion is always we see the way I calculated versus you calculated the KPIs. Okay, I think that's a simple one. I will put it. You said people. I think the most important and sometimes neglected aspect. It's very important taking people in the confidence, and for that, I think the another important aspect of it, management support, complete buy-in from the leadership team that they believe in it. Unless and until you close those legacy gate, otherwise you'll always have parallel systems, and you'll always hear how it cannot kind of convert into the success. So those are the two quick points from my side.
Thank you, Last. Sumit, a quick word from you.
Uh, what can I say? Yes, every single change that one does in a company by introducing these techniques and technologies must be celebrated, because change is something that a mankind is averse to, right? And the more we accept the change, the better we are trying to become. The only last leaving thought I say is, I don't think so digital transformation journey has success and failures. If you are successful, you are turning a caterpillar into butterfly. If you are failing, you are turning a caterpillar into a faster caterpillar. That's how I'll put it.
Thank you. Thank you, Sumit. Talking about celebrating performance, in the organization, I just want to sort of again tell all the MSME members, for those of you who've already embarked on the digital transformation journey and have seen some success, would really encourage you to go and apply for, we are having a flagship digital award ceremony sometime in April this year. IMC Digital Committee is organizing that. Selby, can I request you to again put up on the chat the link where the MSMEs can go and register themselves and talk about their project that they have already implemented in their organization. And hopefully you can become the role model for a number of other MSMEs, in your sector or for, in other sectors. So really looking forward to a whole lot of you, for those of you who already embarked, to go in and register yourself for those awards, and hoping that you all are there in the final down selected list for the winning position. With that, I really want to thank you. I don't see any questions out here in the chat section, so I really want to thank all of you. Mr. Ullas Deshpande, thank you so much for your time and for your views. Mr. Bishwadeep Bhattacharya, really appreciate your time, and all that you've shared with the MSME audience today. And Sumit, always a pleasure to listen to you. It's always great, and I've known you, and you're fantastic at what you do. And thank you for the ART. Encourage everybody to go and register for the ART. Yeah, thank you so much. Thank you, everybody.
Thank
Back
you
to
very
you,
much.
Selby. Thank you.
Thank you.
Thank you.
Right.
Thank you for this wonderfully enlightening session. With these sessions, we close today's conference and will join back with further interesting and insightful sessions tomorrow at 12:30 p.m. IST. Till then, bye for tonight and have a great evening ahead. Meet you all tomorrow at 12:30. Thank you. Thank you all.